Hey, what's up you guys? So in this video, I wanted to share with you guys a few habits that I've adopted over the past few years that have allowed me to essentially start to build and grow my net worth over time. Now, I'm not saying that I'm like mega rich or that I'm even a millionaire. That is not what I'm trying to get across to you. But what I am telling you is I was someone who was essentially, yes, I was working and I was making money, but I was not building my net worth over time. So once I started to implement these habits that I'm going to share with you guys in this video, then I begin to see my net worth go up over time. So with that being said, if you're new here to the channel and you're not currently subscribed, find the subscribe button on the bottom right side of your screen. Give that subscribe button a quick tap for me so that way YouTube will notify you each and every time I upload a video just like this one you're watching right now. So with that being said, let's go ahead and get right into today's video. All right, you guys, so the very first habit that I started implementing in my life that allowed me to start growing and building my wealth over time was that I had to learn and that I began to adopt this habit of living on less than I made, because there's really simply no other way about it. Like, it's virtually impossible to ever think that you were going to grow your net worth or build your net worth, or even build wealth over time if you're just like your income is all in, all out. Like, obviously, like, you went out and you made the money and then you blew it all. So where is there any money like whatsoever for you to ever grow or build your wealth? Or even if at some point, you had some level of like wealth, well, if you're spending all the wealth that you're making, like you're always going to come back to zero, So exactly my point. Like, you got to find a way, regardless of like what your income is, and I get it, like everyone needs like a certain amount of income just to be able to survive, just to be able to take care of like your basic living expenses. So if you're at a point where like your income is really, really low and you're just barely scraping by, first and foremost, you got to get your income up. You got to find some type of way to increase your skill set or whatever that, or take on an additional job or whatever you need to do, but you got to find a way to increase your skill set or your income so your income can go up. So then at that point, you're then able to kind of scale back on your spending, or even if you're not scaling back, because your income is higher, you're still buying things, you're still enjoying life, but you're not quite spending all of your income. And because you're not spending all of your income means you're leaving a cushion of your income available to you, to keep for yourself. And that is, like I said, that is the very first thing. You cannot, like, your income cannot be all in, all out. You gotta find a way to ultimately set aside a portion of the income that you earn. So that was the first habit that I learned to adopt and implement in my life. And because I did this, ultimately down the road, it allowed me to start building and growing my net worth. So with that being said, let's go ahead and get into the second habit that I adopted. All right, you guys, so my second habit that I adopted was the habit of taking the free and clear cash that I had saved and realizing that I cannot just save cash to just save cash and hope to one day build and grow my, net worth and my wealth. So I realized and I adopted the habit of like saving cash so that I could invest it into assets. And that became the habit that, I adopted and implemented in my life. And at that point is when I really started to see, my wealth start to grow and my net worth go up over time, because now my cash is not just sitting in a bank, virtually earning zero. Now I am controlling and owning some type of asset. And my two favorite asset classes is investing into the stock market, into individual stocks, or investing into real estate. And yes, I do own assets in both of those asset classes. And just to be very clear, I do not invest for the short term in either of asset classes. So I don't do day trading and I don't do, buy and sell flipping with real estate. I buy the real estate to like put a long-term tenant in there. And my idea and my goal and plan is to rent that property out until it's completely paid off. And then the same is true when it comes to stocks. When I invest into stocks, I invest into them. I try to invest into what I believe are a great company or great companies that have a really great future ahead of them, and I hold the stock for the long run. And at some point when I realize this company is no longer looking like the future is so bright, then at that point I will decide to go ahead and get rid of that stock and no longer hold that stock and take the money and go invest it somewhere else that will be a good investment. But like, to the point of what I was trying to make in this second habit is my second habit was to realize, yes, as great as it is to set aside some cash, from your income, but saving money alone is not going to build your net worth or grow you wealth over time. You need to find somewhere to put that money to work for you, and you need to put that, the place that that's going to be is into wealth building type assets. So I looked and I realized, hey, where do wealthy people put their money, to work for them to build wealth for themselves? And I realized really quick, they do it in the stock market, in all forms of different assets within the stock market, and they do it in real estate. And I was like, hey, I'm not trying to reinvent the wheel here. I'm trying to build wealth for myself. So if it works for them, I'm going to go ahead and do it too. So that was the second habit that I adopted in my life and started implementing, was to take as much cash that I could, once I've saved it up, and then start investing it into assets that I knew would build wealth for me, like stocks and real estate. All right, you guys. So another habit that I adopted and implemented in my life to grow and build my net worth over time was, when it came to investing, I did not understand investing. Like, I did not understand the stock market. I did not understand real estate. So I did have to, do my research. I did have to take, some time learning about these different asset classes, watching videos, talking to people, ask the questions, figure these things out, and ultimately like do my due diligence to understand how do these things work. And I didn't necessarily do them both at the same time, but like ultimately I figured it out over time, and I was like, hey, this was my like third habit that I adopted. Like, I learned that it would not serve me in any way whatsoever to like invest into something that I simply do not understand. So when it comes to the stock market, if there is like a type of stock or a business or whatever it is, however you want to look at it, because ultimately stocks are businesses, they're not ticker symbols, Like, yes, there is a stock ticker symbol, but that symbol represents a business. So you do not want to invest thinking, oh, I'm going to buy such and such symbol. It's like, no, if you buy that, you are investing into that business. So I learned to think about it like, hey, these are businesses, not just stocks, they're businesses. And I need to understand these type of businesses and what they do, how they make their money, if I'm going to invest into them. So if I do not understand a certain type of investment, I simply won't invest into it, because how can I know how they make their money, when things are going good, when things are going bad? And it's like, if I don't understand it, like I said, I simply just won't be a part of it. Because hey, just because like things like the media and you hear all kinds of noise and people telling you like, oh, this company's doing terrible and their earnings are bad and such, does not mean like you need to sell your investment. You could be in a really great company and the stock could just be having, or that business could just be having, a little bit of a hiccup, and that could provide you with a really great opportunity where you could truly like double down and buy even more of that, that business's stock. And then when it rebounds, you'll have set yourself up to like substantially grow your net worth. But if you don't know what you're invested in, you don't have confidence or conviction into, this stock investment that you made, as soon as you hear some bad news, you're just gonna be like, oh my gosh, I'm so scared to death. And then boom, you just sell your investment, take a loss, or, significantly lose some of the value that you had, and you could have made significantly more money, but you got scared right out of your position because you never knew why you bought in. And you don't even know really anything about the company. You just bought because it was like something that was popular or whatever other people were doing. So to prevent myself from getting caught up in situations like that or being taken advantage of like that, I make sure that I understand the investments that I am invested into, and anything that I put my money behind, I make sure that I understand it very well before I put my money behind it. And like I said, that's true both in stocks, the stock market as a whole, and it's also just as true when it comes to real estate, because I had to do the same. I had to understand like, how does it work? Like, okay, if I buy the property, then like, what do I got to do legally? Like, how does it work when it comes to, putting a tenant in there, like all these different things, and like what's expected of me, what's expected of them, all this kind of stuff. And like, I learned it all, I figured it out, and hey, now it's like, I get it, and that's why I own real estate to this day, because, I figured it out. But that is going to be a really great habit for you guys to look at considering doing, is like, before you do any type of investing, study the type of assets that you're looking at investing into, understand how they work. So then that way you will not get scared out of your investment just because people are saying, oh, this is like a really bad time for real estate or a really bad time for stocks. And it's like a perfect example. It's like right now in the stock market, like the stock market has plummeted a lot. And everything you pretty much hear when it comes to stocks is bad news. Now, if you were invested into a company and you don't know any better, well, they're going to scare you to death and you're going to be right out of your position. But if you were invested into a really great quality company and you know exactly what they do and you're like, hey, this is not a company specific problem, this is just like an economic problem, or this is, just a market problem. So it's not a problem with your company, it's just a problem in the economic society as a whole. So there's no reason for you to sell, your holdings into those stocks, and you would say, hey, while the price is cheap, I'm just going to buy more. So like I said, know what you are invested into before you understand the type of investments that you would like to get into before you invest into them. That's what I meant to say. So these are 3 other habits that I've adopted and that I've just learned to implement into my life. And when I did these things, that is at the point when I started to see my net worth begin to grow and start to build over the years that passed. So it's been said throughout time that those who understand the power of compound interest use it to their advantage, and those people benefit tremendously. Now, the opposite of that is also true. Those who do not understand the power of compound interest or how to use it to their advantage end up becoming a victim of it, and they pay compound interest. So in this video, I'm going to share with you exactly what compound interest is, how to then use it for yourself, so then that way you could be on the benefiting side of compound interest. And with that being said, let's go ahead and get right into it. All right, so I'm going to give you the very simple and plain, easy to understand explanation of exactly what compound interest is. So compound interest is simply you, the investor, earning interest on top of your interest. So I'm going to give you a very quick example of exactly what that looks like. All right, so let's say that you make a $1,000 investment, and on that $1,000 investment, you are not going to add any more money to it whatsoever as long as you hold that investment. Now, that $1,000 is going to, for this example, going to grow at 10% a year. Now, after 1 year of having that $1,000 invested at 10%, interest, you are going to have $1,100. Now, in say year 2, you might think, oh, I'm going to have just another $100 because it's going to gain another 10%. But because of the power of compound interest, you are not gaining interest on top of just your $1,000. You are gaining your interest on top of $1,100. So in return, you're going to end up with actually $1,210. Now, this is where it really starts to take off. So when you start looking out from say year 2 to maybe year 10, in year 10, without adding one single penny to your investment whatsoever and just solely letting compound interest work for itself, or in other words, working for you, and you are starting to realize the power of compound interest, in year 10 of that $1,000 investment, your $1,000 investment has now turned from $1,000 to $2,600, and this is the power of compound interest. All right, so now that you know exactly what compound interest is and how compound interest works, you want to know exactly what you should do next, so that way you could start using compound interest for yourself in your own life. Well, really what it comes down to is you don't want to wait any further or any longer to start investing than you already have. Now, the truth is, you didn't know before watching this video what compound interest was or how it works. But now that you know, because you watched this video, you want to get started with investing as soon as possible, because the truth is, when it comes to compound interest and the power of it, the more time that you give it to work and grow, the greater the results are going to be for you. Now, in the example of this video, it was just $1,000 investment and it grew significantly without adding any more money to it. But you need to ask yourself, what would that investment look like had you just consistently added some more money to it and really just accelerated the process? So hey, I know you're going to be looking for a really great place to go ahead and sign up, so that way you can open your own investing brokerage account, so that way you could start becoming an investor and really just getting the effects of compound interest working for you and growing your own money. So I'm going to put a link to the stock market investing platform M1 Finance in both the description box of this video as well as the pinned comment of this video. So if you would like to sign up with M1 Finance, be sure to click the link in either one of those places on this video. Hey, what's up you guys? So in this video, we're going to be talking about and discussing the investing strategy known as DCA for short, or for those who are not familiar with what DCA is or what DCA stands for. DCA stands for dollar cost averaging. So that's what we're going to be discussing in this video. So if you're new here to this channel, first off, welcome to my channel. And if you enjoy personal finance, credit cards, videos about making money and overall growing and building your net worth and wealth for yourself, you want to find that subscribe button on the bottom right side of your screen. give that subscribe button a quick tap, so that way you'll be notified by YouTube each and every time I upload a video. So with that being said, let's go ahead and get right into today's content. All right, you guys, so dollar cost averaging, what exactly is it? So dollar cost averaging is an investment strategy for investing within the stock market to build your investment, position that you want to have. But someone who uses the dollar cost averaging investing strategy is someone who does not want to time the market. So timing the market is when you want to buy at the very specific point in the market where you believe hey, this is the bottom. It's not getting any cheaper for this investment, or hey, this is just before the stock is going to, skyrocket or whatever. So you want to get in at those particular price points to benefit the most. Well, that's the total opposite of someone who's going to want a dollar cost average, because they're not either sure when is those specific points that they should make those purchases, or they do not want to be bothered with trying to figure out those because they simply just don't have the time or the knowledge for it. So this is where dollar cost averaging comes in. So dollar cost averaging is when you were hey, I'm okay with not making this stock market investment at the lowest point, at the lowest, cheapest possible price, or, at the point where I'm going to benefit the absolute most by making that investment at this point. What they're looking instead to do is just get a very, average price point. They're hey, it doesn't need to be the cheapest, and it doesn't have to be the most expensive. As long as I'm into this investment and the investment is going to provide consistently good returns for them, they are more than happy to just build and scale their position into this stock market investment using the strategy of dollar cost averaging. Now, how do you actually implement the strategy of dollar cost averaging? Well, that's what we're about to talk about right now. All right, so what does it look like to actually start using and implementing the dollar cost averaging, investing strategy? So you're gonna need two things in order to do this. One, you're gonna need some money. I can't help you out with that. You gotta go out there, make that money, get that money, and once you got it, you knocked out, the first one. Now, the second thing you're going to need is an investing brokerage account, some type of stock market investing company that you are going to make your stock market investing, investments within. Now, if you do not know what company that you want to, sign up with and open up your investing brokerage account with, well then, hey, I'll take care of you. I'll put a link down in the description box of this video, as well as in the pinned comment below. So, hey, it's going to be a link to the investing platform, M1 Finance. It's a really great investing platform, great reputable company, has really great services. Everything on the site is pretty straightforward, very beginner friendly, very easy to use. I use it myself, and you're not going to have any problems. If there was something about M1 Finance that I'd not, deemed credible or anything like that, I would never recommend it or suggest it to you guys, my audience, because I just want the best for you guys. So like I said, when you're ready to sign up with the company to start doing your stock market investing, click that link down in either the description box of this video and sign up with M1 Finance, or you could also use the link that will be in the pinned comment of the video. So, money and investing brokerage account. You got those two, you're ready to go. Now, what are you gonna do? In the example that we'll go with in this video, you're gonna deposit, say, 25 bucks a week. So every single Monday or whatever day of the week, you're gonna deposit 25 bucks. Okay, cool. When that money goes in, that money is not going to just sit in the account. The money is going to purchase you shares of an individual stock, ETF, index fund, mutual fund, cryptocurrency, whatever is the thing that you are wanting to dollar cost average into or build your investment into, right? So that is you actually dollar cost averaging into it. Now, that doesn't complete the process, because what actually causes it or allows it to become dollar cost averaging is the process of the shares, swinging up or down in price over the period of time. So as you continue this process of, every Monday depositing the $25, and then, you keep on purchasing, shares of this particular investment that you've selected, well, like I just said, the price is going to dip down some, it's going to come up some, it's going to hit a high one day, it's going to hit a midpoint, and it's going to hit a low. So let's just say, hypothetically, this stock market investment that you select, the lowest it ever hits is 25 bucks, right? And then the midpoint is going to be somewhere around that 50, and then the just slightly past the midpoint would be, or the point between the very high and the midpoint is going to be right around 75, and then the absolute high would be 70, or I'm sorry, 100, right? So the very high, all-time high of the stock is 100, the very, very low is 25, right? So as your dollar cost averaging into this stock, what's going to ultimately happen is like your total cost is going to average out, because you're going to be owning some shares down at 25. You're going to be buying those. You're going to be buying some at 50. You're going to be buying some at 75. You're going to be buying some at 30, like all over the place, right? But at some point it's going to even out, and it's going to be roughly like somewhere, between that 50, maybe 55 range. Like that's going to be like the midpoint. So we'll just call it 50, right? For the sake of the video. So you're going to dollar cost average for that middle point. Like that will be, the midpoint that the stock trades at, or in whatever scenario that the stock actually trades at more often than normal. So let's say the stock trades lower longer than it does trade up. Well, then that means you're going to purchase the shares even lower. So it might be like at 40 or 45. So the longer that you're able to purchase shares at a lower price point means your average is going to be lower. The longer that the stock trades higher, the higher your overall cost is going to be for owning that particular, stock market investment. Now, once you reach the point where you're like, hey, I'm very satisfied with the amount of investment that I have within this particular stock market investment, you can then at that point decide that you no longer want to contribute to that, stock market investment, stop funding it, stop contributing money to it. And then you could just simply hold that, stock market investment until you are satisfied with the returns that you ultimately get long-term from holding that investment. So who should actually use this dollar cost, averaging investment strategy? I personally believe that anyone who does not have a large lump sum of money to go ahead and purchase the total amount of shares that they would like to own within, whatever the stock market investment is, that is the perfect person who should be using dollar cost averaging, because you simply do not have enough money to make that complete total purchase that you want with that investment. So because you don't have a lump sum of money to go ahead and, dump into that stock, and also you do not have like either the knowledge or you don't want to spend the time trying to figure out when is the very best perfect time to make that investment, then that's even more reason why you should say, hey, I'm just going to invest consistently some amount of money until I have the position within that investment that I'm looking to get. And then after that, then you would just hold it until you get the type of return that you were okay with. And then maybe at that point you decide, hey, I'm up pretty good. Maybe you're not like, the outlook on that particular investment is not looking as good as maybe it once was. And you decide, hey, this is the point when I decide to go ahead and step out, And then at that point, you would just go ahead and sell that particular investment. So that is exactly what dollar cost averaging is. Myself, I personally use the dollar cost averaging, investment strategy to build and scale myself into the stock market investing positions that I want. Like I said, the link will be down in both the description box as well as the pinned comment below to the investing platform M1 Finance. Be sure to check out that link. Click the link, comment section below, pin comment, sign up with M1 Finance today. Let me know your thoughts and comments on the video down in the comment section below. And if you're new here and you're not already subscribed to the channel, be sure to hit that subscribe button on the bottom right side of your screen. Hey, what's up, you guys? So look, maybe you're ready to go ahead and take the next step in your financial journey to go from learning about, personal finance and investing to actually becoming an investor yourself. And that is absolutely what I want you to do. I want you to pursue investing into the stock market, pursue investing into real estate. So then that way you could ultimately hit the grand goal of ultimately reaching financial freedom. But there is a caveat, there is a catch. So there's 3 things that we definitely want to make sure that you got completely covered and taken care of before you become an investor. Alright, so if you're new here to the channel, what you want to do is you want to look right here on the bottom right side of the screen. You want to find that subscribe button. Go ahead and give that subscribe button a quick tap for me. So that way you will get notified by YouTube each and every time I upload a video, just like this one you're watching right now. And then if you could just do one more quick thing for me before we go ahead and dive right into today's video. Find the thumbs up button right here beneath this video. Go ahead and give that thumbs up button a quick tap for me. It helps this video and my channel reach a wider and wider audience so more people can go ahead and learn the information that you are learning in today's video as well. Thank you so much for taking the time to do that. And with that being said, let's go ahead and get into today's video. All right, you guys, so these 3 things that I'm about to share with you right now in the video, they're really, at least in my opinion, they're like a financial fitness checklist to let you know whether or not you are financially fit and ready to start investing. So you definitely do not want to miss any one of these three. So be sure to watch this video from beginning to end, and I hope that yes, you do pass the test and that you do not have any of these three things going on and that you are ready to start investing. But hey, even if you got one or two going on, we could go ahead. I'll give you the information in the video what you could do to get that on track, so then that way you could get yourself financially fit and that way you can move forward and start investing. All right, you guys, so let's go ahead and jump into number one out of these three things that we're going to be asking ourselves, so that way we could find out if we are ready to start investing. So number one is you need to ask yourself, am I living a paycheck to paycheck lifestyle? And if your answer to that question is yes, I'm living a paycheck to paycheck lifestyle, then you absolutely are not ready. You are not financially fit to start investing and to become an investor. First and foremost, you're going to have to deal with that paycheck to paycheck lifestyle. So in case there's anyone out there who does not know what it means to live a paycheck to paycheck lifestyle, what it means is that each and every pay period, from one pay period to the next, you spend all of the income from that paycheck. So like if you get paid today, you are going to spend all of the income that you receive on that paycheck all the way up into the day of your new paycheck, or maybe even days before. You are anticipating and you cannot wait to get paid again because you basically do not have any more money to spend and you are absolutely desperate for that next paycheck because you can't pay for the things you need to. You cannot spend any more money because you do not have any more money. You are truly living from one paycheck to the next. This is what it means to live a paycheck to paycheck lifestyle. And someone who is already living so financially tight with their income from one paycheck to the next, that is exactly the type of person who should not be, investing, or who is not financially fit and ready to become an investor. Because obviously, like, you are stretching your money as tight as you possibly can, or even tighter than you obviously should be, to put yourself in a strong financial situation. So first and foremost, you have to deal with that situation, because the chances are somewhere in your bi-weekly budget or your monthly budget, you are simply spending too much money in some areas, and then you just really need to look at that and ask yourself, like, hey, where am I overspending? Is it, are my mandatory living expenses, are those too high? Where can I cut back to lower down some of that excess spending that I'm having? Or hey, maybe my mandatory expenses are good, like I got all those in check, but with all my extra cash that I have left over, maybe I'm just spending totally recklessly in those areas with all my free and clear cash, and that you just really need to look at that and kind of create a much more intentional budget with that income that you are getting from paycheck to paycheck and on a monthly basis. So that way you could kind of cut down that spending, and then now you're no longer going to be living from paycheck to paycheck. You're going to go from this paycheck to the next paycheck and still have plenty of free and clear cash left over. And then, like I said, you're no longer going to be living a paycheck to paycheck lifestyle. And then once you start doing those things, you will be in a much more stronger financial situation. And then yes, you will become more financially fit and ready, or at least put you in a situation where now you are starting to become more prepared to become an investor. All right, you guys, so let's go ahead and jump into number two. So in number two, the question that I want you to ask yourselves to find out if you are financially ready to become an investor and start investing is, do I have high interest debt? So in my opinion, I would define high interest debt as any type of debt that you have to pay interest on, and that the interest rate for that debt is 5% or more. All right, so if you've borrowed some money and the interest rate on that money that you have borrowed is 5% or greater, then I absolutely would say that you should focus your income on paying down that high interest rate debt before worrying about trying to take your income and become an investor and start investing into assets. Now, the reason why I'm saying that is because it does not make financial sense for you to try to take your hard-earned income and invest it out there with the hope of growing it, and who knows what type of return that you can get or that you won't get. But what we do know for sure is that you have a locked-in interest rate that is on the debt that you have borrowed, and we know for sure that that debt is at least 5% or greater, and that is compounding monthly. And so you have compound interest working against you, and we want to eliminate that before we could start getting compound interest working in our favor. So you got this debt that's just attacking you over here, preventing you from building wealth, and that's going to make it tremendously hard for you to build wealth. And then how are you even going to have a good sizable amount of money to invest each and every single month in order to put into assets when you have this monthly payment or multiple monthly payments with all kinds of different interest rates that are high, and you have to make those monthly payments? And you can't neglect those, because now that's just going to tear up your credit score and get you into a whole nother financial mess, and you don't even want to go there. So this is why I'm saying, if you have high interest rate debt, you want to make sure that you go ahead and pay this off. I mean, this could be personal loans, credit card debt, HELOC loans, whatever it is, it doesn't matter. Whatever type of high interest rate debt you have, if you have it and the interest rate is 5% or greater, make sure that you prioritize paying off that debt before you start looking at becoming an investor and start investing into the stock market or into real estate. All right, you guys, so let's go ahead and jump into number 3. So in number 3, the question that I want you to ask yourself is, do I have sufficient savings set aside? So what is sufficient savings? Like, that's super vague, right? So in my opinion, sufficient savings set aside is going to look something like no less than 1 month of your mandatory living expenses saved up in cash in some type of savings account, high yield savings account. Whatever you do, do not save that money in your checking account, because you will inevitably spend it. So sufficient savings is going to look like you having whatever your mandatory living expenses, whatever it costs you to live 1 whole month with just paying all your mandatory living expenses, whatever that total adds up to, that you need to have at least that amount of money in cash set aside in some type of bank account, right? So you want to have nothing less than 1 month of that mandatory living expenses, but an ideal situation would look something more like 3 to 6 months of your mandatory living expenses. But I personally say, if you got at least the 1 month, you're going to be okay, but you definitely want to make an effort to add to that 1 month of mandatory living expenses. Now, why is this so important? Because if you do not have at least 1 month of your mandatory living expenses set aside in cash, and you go ahead and say, all right, I don't have no type of reserve cash put aside, I'm going to go ahead and start investing my income out there. I'm going to start trying to, invest my money. I'm going to grow and build my wealth. Well, as soon as some type of financial bump comes along in the road in your financial life, and, maybe work slows down a little bit, maybe you lose your job, whatever happens, right? Or maybe something just goes on where it kind of puts some type of financial strain on you, and you're like, hey, now where do I go ahead and get the money to get myself out of this situation? Maybe it's a car breaks down, maybe it's some type of major financial repair, or just some large expense, right? And when that thing comes up and you do not have quick cash that you could go ahead and access to go ahead and resolve the issue that has popped up, the first thing you're going to do is look right at your investments, and you might have picked really great investments. They could even be performing very well. That's going to be even more reason why you're going to go to that, because you're like, oh, look, I got a good amount of money built up, and you really don't want to sell them, but because you need the money, now you're going to tap into your investments, and now you're defeating the whole purpose of why you invested in the beginning. The whole purpose of why you started to invest was to grow and build your wealth, not so that you can invest. So then that way, when some expense comes up, you could tap into your investments, destroy your investment, cash out, get the money, and then pay some bill or some financial thing that popped up. And now you don't have any more assets, or your assets are, that's it. You ruin the compound interest that could be happening with your investments because you've tapped them out, you cashed out. This is why I'm saying you want to make sure that you have some reserve cash set aside, so that way when financial bump in the roads pop up, it's not going to be much of a financial bump in the road. You're just going to be like, oh, this thing came up, let me tap the cash, let me go ahead and pay for this thing, resolve the issue, and then it goes from being an issue to no issue whatsoever, and you never have to worry about tapping your investments, cashing out of them, or selling part of them, or anything like that. And then you don't have to be saying, oh, let me try to be slick, keep my assets, and then, hey, let me go ahead and get myself into credit card debt or some other type of thing, or a personal loan or whatever type of way of borrowing the money, so that way you could keep your assets, but then go get yourself into some type of debt. You don't want to play that game. You want to be in a strong financial situation. And in order to do that, you want to make sure that you have some type of cash set aside before you start investing. And then once you've had that cash set aside, you don't have to worry about necessarily always adding to it. Sure, it's great if you do, but even if you don't, at least you always have some cash set aside. So that way, when things go wrong financially, you have some cash to tap into and you don't have to worry about tapping out your investments. Hey guys, so in this video, I'm gonna share with you guys how I got $100,000 completely tax-free. So do me one huge favor, right down beneath this video, find that thumbs up button, give that thumbs up button a quick tap for me. And with that being said, let's go ahead and get right into today's video. Alright you guys, so before we could even start talking about or discussing how I got this $100,000 completely tax-free, we first have to address, this issue of how did I even get $100,000 to begin with? Like, where did this $100,000 come from? So it all goes back to the year 2016 when here in the city of Moreno Valley where I live, I came across the opportunity to invest into a single family home and purchase that single family home for $199,000. And that's exactly what I did. I submitted my offer was accepted. I purchased that single family home. It was a 2-bedroom, 1-bathroom. And after I purchased it, I decided, hey, I'm not gonna live in this property. That's not the reason why I bought it. I bought this property solely for the purpose of making money. So what did I do? I went ahead and renovated the property. It just needed very light renovations. It just needed, some fresh paint. It just needed, some new flooring. And pretty much after that, and I just, had the yard landscaped a little bit. And after that, it was pretty much good to go and ready to put a tenant in. And that's exactly what I did. I placed a tenant into that property. And then to be honest with you, I was not really making any profit from the rent, from the rental income on a month-to-month basis. But I knew over the years, the rental rates would rise and then I could maybe, make a little money in rents, but my ultimate goal was to make money with the property appreciating over the years to come. So I did exactly that. I just continued to just rent out, this rental property over the next few years, all along the while paying attention to the property's value, over the period of years. And as I was doing that and paying attention to the property's value over the, last following years, I saw that, gradually the property was increasing in value. And this was very exciting because I'm seeing the investment pay off, especially because I'm not really winning on a month-to-month basis. Like I said, I was basically breaking even as far as the monthly rental income, right? But it's cool, every so often to just watch the property's value go up, by thousands of dollars, right? And then so we fast forward to the year 2022 around January, and then I went ahead and really looked at this property and was like, I know it has gone up significantly from when I first bought this property, right? And then you factor in not only has it appreciated in value, but because the tenant is paying the rent and paying the mortgage, the value that I owe on the loan is also going down. So you have the pay down, on the loan plus the appreciation. So there was a fair decent amount of equity by the time that I finally, looked at what's the true value, what type of equity is built up into this real estate, piece of property that I own. And so when I had the property, evaluated to see its worth, it was estimated that it was at $400,000. And I was like, hey, there's a really good amount of equity. Basically the property has doubled. It's gone from $200,000, my initial loan amount, all the way up to $400,000. And then at this point, when I'm looking at doing, some type of move to be able to access some of the money that's here, I only owed 170,000 or 168,000, right? Somewhere in that range. And so at this point, I'm okay, I owe the bank 168,000, 169, somewhere between 168, 170,000. Roughly, we'll just call it 170,000. So I owe the bank 170 on this piece of property, but it's worth 400. And I'm like, okay, so what do I do, with all this other value that this property holds? Do I sell it and then pay the taxes and so on and so forth and go that route? But then I'm like, yeah, that's great. I clear all this money, after I pay the taxes and real estate, agent fees and so on and so forth, but now I don't have the property, so I get the cash, but now I lose the asset. And I'm like, yeah, I don't really like the idea of that. So what I started thinking about is what's a better option? How can I still keep my property and then also still get maybe not as much money, but still a decent amount of money? So that's when I went ahead and decided to make my next move. All right, you guys, so it's at this very point that I went ahead and decided the very best option for me to go ahead and do with this rental property at this time that I have all this large amount of equity in it was going to be for me to go ahead and decide to do a cash out refinance on this property, because in doing a cash out refinance, it was going to allow me to access not all of the equity that I had within the property, but it was still going to allow me to, access a fair amount of the equity without selling my property. And so for those of you guys that are not familiar what a cash out refinance is, basically what happens is like you have a property, you have like a loan that you originally, borrowed the dollar amount that you borrowed on that property. So the bank was going to say, okay, so you want to now access the like current value that's in your, that your property's worth. You want to access some of the equity in there. You want to borrow some of that money because that's what it ends up being. It ends up being a loan. So they're going to say, okay, like in my example, they're going to say, okay, well, you owe $170,000. You want to borrow an additional $100,000, right, on top of that. So they're going to say, okay, what we're going to do is we're going to pay off the 170 that you owe, and then we're going to also tack on that other 100 grand, because that's, you have that much equity and more, because they're not going to let you borrow all the equity that you have in your home or your property. But what they're going to say is, okay, we will let you, access a certain portion of it, a certain percentage, and then beyond that, they won't let you access it, right? So, because they want you to still keep a certain amount of equity within the property, because other than that, they see it as too risky, especially if it's going to be like, not your primary residence, and it's like a rental property, and which in this case it was, right? So then they're going to say, okay, so we're going to pay off your old loan, then we're going to give you the new loan, and it's going to include the equity that we're going to give you, like that 100K, and then we're also going to, add on that original loan, and we're going to put it together and create a new loan, and that's going to be the new total loan amount that you're going to borrow. And that is basically like the quick, basically summed up version of what like a cash out refinance is. So I hope that helps out, and if it doesn't, and I didn't do a really great job, just search, search online, read up about a cash out refinance. Maybe they have like a better way of explaining it to you guys, but that's like the best simple way that I know how to kind of explain it to you guys. So I went ahead and did the cash out refinance, and when I did it, what they ended up telling me, like my goal when I was doing the cash out refinance was like, hey, look, I want to pull out and I'm hoping to clear $100,000 for myself, right? And so what they ended up telling me is like, hey, look, yes, like your property is worth, $400,000, but we're only gonna like let you get $106,000, like, of your equity, through the cash out refinance. Like we will give you $100,000, but this is not factoring in like the fees or like, any of the other expenses associated with the process of like going through the cash out refinance, right? So when it was all said and done, and I went ahead and decided to go ahead and go through with the cash out refinance, and after all the like fees associated with it and all the going through the whole entire process, when it was all said and done, like I ended up clearing, like, so they gave me the 106, then subtract all the fees and like expenses with it, and when it was all said and done, I got $86,000, right? So whatever the difference was, that's basically what it cost me to go through the process of doing the cash out refinance. So in my mind, I'm like, hey, that's great, like. And yes, like this is why I titled getting it a $100,000 tax free, because now this is the part like you guys are wondering, like how does it become tax free? So the reason why I say that it's tax free, because it is like I didn't pay any taxes. Yes, like there was fees and like expenses for me to do the cash out refinance process, like to go through that whole situation, access the funds, get paid the 86,000 to me, them take the difference, from the 106. All of that, yes, like I had to pay those fees, but there was no taxes. Like they never taxed that income, because it's not considered income. It's considered, or rather, I should say, they didn't tax that money because it's not considered income. It's just considered a loan, because that's exactly what I did. I borrowed $106,000 of the value of that rental property that I owned. And so because it's a loan, loans are not, they don't tax loans. So that's like that's like the loophole, that's the benefit of doing like a cash out refinance. So had I sold my property, I would have to pay taxes, I'd have to pay the real estate agent fees, all this other stuff, right? So that's why I said I went ahead and went with the decision to go ahead and do the cash out refinance, because in doing so, I'm able to borrow that $106,000. Yeah, I got to pay a little bit of fees, let them take their money for doing the process. But when it's all said and done, I pocket $86,000 into my bank account. with no taxes, and then it's like, bam, I got that all because I had this rental property, and that's the benefit. Like, I still own my property. Now, something that obviously like I need to mention in this video is that in doing so, the loan amount goes up, right? Because now I don't owe 170, I owe like 270 or 276, right? So the total amount that the total dollar amount on my loan goes up, and because of this, the monthly payment goes up, right? So as long as I'm able to continue to rent out my rental property for an amount that's going to cover my new mortgage payment, then I'm fine. And that's exactly what I was able to do, because like I said in the beginning of the video, I knew that over the years the rental rates would go up over time, and that's exactly what happened. So all I did was just adjust the monthly rent, to what the current market was at the time. And when I did so, I didn't have to like raise it like dramatically. I just barely raised it little by little. But what it did mean, because over the period of years, like my tenants were changing and the rates gradually went higher and higher, with each tenant that moved in. And then what it ultimately ended up happening is, it's not that I charged like the new tenant like some crazy higher rent to just account for me getting this money. What it meant is that I was no longer making as much money on a month-to-month basis now, because I took on a new loan for a higher payment. So because my payment went higher, I'm not clearing as much month-to-month profit, but I was able to access, a rather sizable amount of money, $86,000. I don't know, to some of you guys, that's probably a very little amount of money. To some of you guys, that's probably a lot of money. You guys can let me know down in the comment section below. But this is how I was able to go ahead and get $100,000 tax-free. And the reason why I say it's $100,000 and not the $86,000 that I actually got deposited is because the whole total amount that I did borrow was $106,000. That's why I say it like that. And I didn't pay any taxes on that $106K. It was just the fees associated with doing the cash out refinance. Hey, what's up you guys? So in this video, I'm going to be sharing with you guys exactly how I go about picking the particular stocks and companies that I invest into within the stock market. So with that being said, if you're new to this channel, my name is Keith and I post videos here each and every single week about personal finance, saving money and investing, and overall growing and building your wealth. So if you enjoy that type of thing, you want to find that subscribe button on the bottom right side of your screen and give that subscribe button a quick tap for me, so that way you'll be notified each and every time I upload a video. So with that being said, let's go ahead and get right into it. Alright, so the very first thing that I'm going to do when I'm going to look for a potential stock or company that I might invest into, what I'm going to do is, first and foremost, I'm going to filter it down to the simple fact that I do not invest in index funds, I do not invest in ETFs, I don't invest in dividend stocks. So that cuts out and rules out a lot of companies and a lot of particular types of investments, right? So I narrow this down to individual stocks and more specifically into growth stocks. So by default, that just goes ahead and filters out a lot of different investments. So then what's next? Now that I know I'm only looking at growth stocks, then I move on to the fact, okay, I literally go like company by company and I'm looking to see like, hey, what's this company up to? What do they have? What kind of product or service do they have to either offer the public or another business? And then I'm like, is that product like a product that I truly believe is in demand now and will be in demand for the foreseeable future? Because I mean, obviously none of us can predict the future, right? So you're like, that's exactly what I look for. Do they got a really great product right now? Is it in high demand? And do I believe that it will continue to be in even greater demand as the future goes on? So that's, I look for that. Now the next thing I do is I say, okay, it's a growth stock, it's got a great product, or service to offer either the public or another business. Now the next thing I do is I say, okay, is this a company that I want to be invested into? And how also do I go ahead and how else do I filter this down a little bit more? Do I understand what this company does? Because just because they have a great product or a great service and they're a growth stock doesn't automatically mean I'm going to invest into it. I also have to understand how this company makes their money. Because if I don't understand how a business makes their money, then I have no, I'm not comfortable putting my money behind that type of investment, because at the end of the day, I really don't understand how that business works. And I personally do not invest in businesses, or stocks that I do not understand, because it's very important that I understand that. Now, the reason why I like hold that standard is because in times like, times like right now, like in a recession or in some market downturn where like you see the price of your stock going down significantly, it's going to become very easy for you to like just pretty much like panic and freak out and think like, oh my gosh, like what did I invest into? Maybe I should go ahead and sell it, because at the end of the day, you don't know, is this still like a good company? Are they going to be okay? You question yourself really, really bad because you're very unsure about this company because you don't understand it well. You don't understand what they do, how they make money, or if they're even making money. So that's why I will only invest into a stock or a business or a company, or a company stock, in other words. I will only make that investment if I believe and I understand that I understand this, particular company very well and how they make money as a business. Now, what's the next thing that I look for? The next thing that I look for is let's just assume a company met all those standards and I'm like, okay, great. What's the next thing? It's like, do I even want to be invested in something? Because like, sure, it could, be a growth stock. It could, have a great, product or service or whatever to offer, whether it be the public or another business. And then it could be, I could understand exactly like how they make their money, but do I particularly want to be invested in that? Is like, do I really believe in that business, or do I think maybe it's a trend, or that it's a fad, that it might not last that long, or hey, maybe this particular growth stock is like on its way, like trending more downwards more than say it is on its way up. All of these different types of things, right? So I look at those things and then ultimately I decide like, hey, do I want to be a part of this? And then I also have to compare the way that this business is like performing with its like, the history that it is available for me to look at. I look and say like, hey, with the way that this, particular stock and business is performing, is this a company that is going to give me the type of returns that I'm looking to get? Because the whole reason why I invest in growth stocks is because typically good, well-run, businesses that are growth stocks, they're going to significantly outperform, the average dividend, paying company or something like that, right? Or an index fund. That is why I particularly invest into growth stocks. So if I look at like the returns over, say, the past couple years and realize like, hey, these returns are pretty much like, they're very average returns. They're the type of returns I could get if I just invest in like a dividend stock, or I might even get better returns if I pick a high quality dividend stock or an index fund. It would just be much more diversified and much more safe. So why would I want to go ahead and like, pretty much take all this unnecessary risk in investing into a growth stock when I could just, get into one of those other investments that's a lot more safe? And in that case, I would not invest in that growth stock. So once I look at all of these particular type of things, all of these filters, in other words, this is how I filter out what stocks that I invest into and what stocks I do not. All right, so at the start of just about every single brand new year, right after New Year's, then you start to hear headlines and titles or videos about how the rich have gotten richer. And like, have you ever sat back and asked yourself, like, how are they able to do this? Like, what makes it possible for the rich to get richer every single year? Well, that's exactly what I'm going to be covering with you guys in today's video. So before we go ahead and dive right into it, what you want to do, especially if you're new here to this channel and you're currently not subscribed, what you want to do is find the subscribe button right here on the bottom right side of the screen. Go ahead and give that subscribe button a quick tap for me, so that way you will get notified by YouTube each and every time I upload a video just like this one you're watching right now. And if you could just do me one more quick favor before we go ahead and dive right into the video, find the thumbs up button right here beneath the video, give it a quick tap for me, so that way you and more people like you will be able to find my channel and be able to enjoy all the type of content that I make here on this channel. Thank you so much for taking the time to do that. And with that being said, let's go ahead and get into this video and find out, why is it that the rich are able to get richer each and every single year? All right, so let's go over a couple assumptions that people generally make when they're coming to the conclusion about why they personally believe rich people are getting richer each and every single year. And so those assumptions look like this. Oh, well, of course they're getting richer, and it has to do with the fact that they're already rich or that they make a lot of money. Well, that's definitely not the case, because there's a lot of people who are rich and they're not getting richer every year, like, or they make a lot of money, but they're not necessarily getting richer. They just, they already are rich and they're kind of staying about where they are, or they make a lot of money, but they also spend a lot of money, so they're not getting richer. So we know that's not it. Or you're like, hey, well, they're able to do things with their money that I'm not able to do. And it's like, well, no, that's not true, because, there's plenty of investments and plenty of things that a person who has money and a person who has very little money could also both make, and you would ultimately get wealthy. So it's not that. So we know it's not that. Okay, so other things. Oh, well, of course the rich are getting richer. It's because they're greedy and, they're scamming people out of money. And it's like, well, okay, so that assumption is definitely false. I mean, yes, of course, there is some greedy rich people, and, there is scam artists, con artists that are doing all kinds of, shady type of things in order to take advantage of people, and they will get, very rich doing that. But that is by far not the majority of rich people. So none of these assumptions that I've just mentioned to you are ultimately like the root cause about why, or what is the real cause why rich people are ultimately getting richer each and every single year. So now let's go ahead and cover the actual main reason why rich people are getting richer every single year. All right, so if we want to answer the question about what is causing rich people to get richer each and every single year, we have to look no further than how did the rich people get rich in the first place. So if you look at a person who has built their wealth, basically started from zero or very little money, you will find that that person has become an investor of one type or another. So ultimately, what is an investor? An investor is someone who makes investments to purchase and own assets that will continually go up in value over time, such as things like real estate, becoming, a real estate investor, maybe single family homes, multi-family homes, commercial real estate, something like that, right? Or investing into the stock market through things like individual stocks, index funds, ETFs, stuff like that, right? So they went out and became an investor and then purchased assets, and those type of assets went up in value over time. Or maybe, hey, they might have, started a business, and then that business got to a point where it was generating a lot of money. And then maybe they invested into opening more businesses, or just investing back into that business and growing that business to a point where it makes even a larger amount of money. And then maybe once they've gotten to where they're really, really generating a lot of money, they invest into other businesses, or again, maybe now they're into real estate or they're into stocks. But the common theme that you're going to find is that ultimately rich people got rich by taking the income that they've earned, however they first started out, whatever job it was, whatever business that they had, they ultimately took that income and invested it in one way or another to ultimately grow and build their wealth. And then when they reached a point where now they have reached that point of like, okay, I am rich or I am wealthy, they have reached financial freedom. That's probably a very good definition of being rich. Like, you might not be rich to the world, but you are definitely rich to yourself, because now you are financially free. But there's also a point where it's like, worldwide, you would be recognized as a rich person if you have multiple millions of dollars, or you're a billionaire. It's like, yes, there is that like undeniable you are rich. Once a person has reached that point that they are like identified as rich, the thing that is going to cause that person to continue to get richer each and every single year is the fact that they are an investor and they own assets like stocks, like real estate, like a business that is going to go up in value the longer and longer that they hold it. And sometimes they're an investor in all of these different type of assets. So the more assets that an investor owns that are high quality assets, high quality stocks, high quality real estate, in prime areas, high quality businesses, and all of these investments go up in value as they hold them, even if the investor didn't make another investment and all they did was just hold on to the investments that they already currently have, and then they just waited until the next year, and then they just waited till the next year. Each and every single year, those investments would go up in value because they are simply high quality investments. Sure, if you maybe have a business, the business might be doing great, and maybe the real estate is down, or then maybe the stocks are up, or whatever order that happens, but ultimately, typically year after year, those investments are going to continue to go up. And because rich people are investors, they own these assets. This is exactly why they continue to get rich each and every single year. It's not because they're evil. It's not because they're trying to take over the world. It's not because they're out there scamming people. It's not any of these reasons. It's because they own assets, like I just mentioned, stocks, real estate, businesses that are going to continue to go up in value because they are high quality investments, and they're going to grow and grow and grow over time. And then as long as they hold them, their wealth is going to continue to grow year after year. But that's even if they didn't make any more investments. But obviously rich people, they've built their wealth over time, and they realize like, hey, I built this wealth by investing consistently, by investing when I saw really great opportunities to build wealth. So they're not going to just sit back as they're making, really good income and their investments are performing really well, and they see opportunities to go ahead and reinvest, maybe in their business, or to go ahead and accumulate, or buy more real estate, or buy more, investments into the stock market. They're not going to see those opportunities and then just decide, oh no, I'm not going to do it. Like, I'm good. Like, I'm just going to sit back and just let all those great investments just pass right on by me. They're not going to do that because they're smart. They realize like, hey, those are really great opportunities for me to continue to grow and build my wealth. So that's exactly what they do. They reinvest their money back into those investments, into those assets, and then their net worth just continues to grow and grow and grow. It's like the hard part is ultimately getting rich, but once you get rich, you just continue to get richer and richer, and it's easier and easier than ever because you have money that is working for you, you have assets that are growing for you, and then ultimately this is the reason why rich people are able to get richer each and every single year, and it seems effortless to them. Alright, so if you're watching this video, it tells me that you are extremely curious and that you want to know more about investing into the stock market, because the chances are you've heard a lot of really great things about people who are invested in the stock market, how they are doing very well with it when it comes to their money and their investments, and you want to know what is the stock market, how you can get invested into it yourself, so then that way you can reach your financial goals and then one day reach financial freedom for yourself. Well, you are definitely in the right place, because I'm going to give you all of that information right here. So if I would appreciate it in return for this, if you could just do me one huge favor. It's not going to cost you anything. All you have to do is just find the thumbs up button right beneath this video. Give that thumbs up button a quick tap for me. And with that being said, let's go ahead and get right into it. Okay, so what is the stock market? So the stock market is a place where companies sell partial ownership of their company to the public, and they do this through the form of stock. Okay, so what these companies do is they take the entire ownership of their company, they divide it up into very small portions and fractions, and then they offer those pieces of their company to the public in the form of what is known as shares. Now, what are shares? Shares is just the name for when you purchase one of those very small pieces of the ownership of the company. So when you purchase like a share of, say, Tesla stock, you now become an owner or a part owner because you own a very small fraction of the ownership of Tesla as a company. Okay, so the more shares that you purchase and own means that you are becoming a larger and larger investor into that company that you were purchasing shares of. So like in this example of Tesla stock, let's just say if there was a total of 100 shares that make up the entire ownership of the company, and you purchase 10 shares of Tesla stock, well then that means you are a 10% owner into the company of Tesla because you own 10% of their shares, so you control 10% and are an owner of 10% of Tesla. Now, the value of the shares that you own and are an investor into will go up or down, and a few contributing factors for that happening will be things like that specific company that you are invested into, their company performance, market conditions, and a bunch of other economic factors. Okay, so why should you even invest into the stock market? Well, the answer is simple. So it comes down to this. We know that saving money alone is never going to be like the strategy that anyone uses to build wealth, because it's just too slow of a process. You have to make the money, then you have to save it, and then you're just like the only factor in your money growing. Like there's no other thing driving like how fast your money is going to be growing. So that's just a very slow and a very boring investment, and you're never going to get wealthy solely through just saving your money, because no one, literally no one, becomes wealthy through just saving money. And on top of that, when you factor in inflation, the value of your money is going down, and because you're saving it and it is not growing at a fast enough rate, the purchasing power of your money is going down and down, and in value over time as your money is just sitting there and it's not growing at a fast enough rate. So that's reason number one why you should invest into the stock market. So historically, the stock market has provided, significantly better returns than inflation. So your money can grow well beyond the rate of inflation. And then if you are invested into good quality companies, in the long run, you can significantly grow your net worth and your wealth over time. Now let's talk about the risk of investing in the stock market, because the truth is the stock market is not all sunshine, rainbows, and unicorns. There is risk associated with investing into the stock market, and there is always the potential that your investments that you made could go significantly down in value, or that you could even lose money. That's just the reality. Now, you can offset the chances and the risk of you losing your money, or by you investing into a bad investment, by doing proper research, studying the potential and the prospective investments that you are thinking about getting into. So how you do this is by when you are looking at a company and you're saying, hey, I think I want to invest into this company, you want to study that company very well before you ever make any type of investment into the shares of their company. You want to understand exactly what they do, what industry they're in, how they make their money, that you want to see that there is, especially as a beginner investor, you want to see some track history, that they have proven to you over a period of years that they are very consistent at what they do as a company, and that they also have a very predictable path that they are going to continue to be successful, and that what they are doing in their specific industry is not just like a trend or a fad that is going to die out really, really soon. Because especially as a beginner investor, you do not want to invest into companies with a short-term mindset. You want to invest in companies that are really great, really high quality businesses, and you want to invest with them for the long run, because anything in the stock market can happen in the short term. So the longer timeline and horizon that you give yourself as an investor, and the market fluctuations, the highs and the lows of the stock market, they're very volatile, which means it can go very up in one day and very down in one day. So you do not want to be investing into companies thinking very, very short term, like 1 week, 1 month, or even 1 year. You want to invest for a significant amount of time, giving your investments the very best chance to perform very well over a long period of time. All right, so you now know what the stock market is, you know what shares are, you know what type of businesses and shares that you should purchase if you want to have success within the stock market. You know the risk associated with investing into the stock market. So how do you actually start doing this for yourself, so that way you could build wealth over time? So what you're going to need to do is that you are going to need to open up an investing brokerage account. Okay, so what is an investing brokerage account? So an investing brokerage account is an account that you are going to sign up and open up with a very reputable company that is very well known for investing into the stock market. So you need this account in order for you to make the transactions, so that way you can invest into the stock market and purchase the shares of the companies that you want to be invested into. Now, I'm not saying that you have to use this particular company that I'm about to recommend to you guys, but if you want to go with a very well-known, reputable investing company, I'm going to go ahead and make the recommendation to you guys that you guys sign up and open up your investing brokerage account with the company M1 Finance. So I'm going to put a link to that company, M1 Finance, in both the pinned comment of this video as well as the description box of this video. So I'm going to recommend that you guys head down to either the description box of this video or the pinned comment of this video, click that link, sign up with M1 Finance today, and create your investing brokerage account, so that way you can start building wealth for yourself. Hey, if you guys don't want to use M1 Finance and you want to use some other investing brokerage account, that's totally fine. It's not going to hurt me whatsoever. But what I do want to emphasize is that you guys make sure that whatever company that it is that you sign up with, that you find a very reputable, very well-known investing brokerage account company, because you are going to give this company access to your financials, your banking information, because they need that in order for you to transfer over your money, so that way you can start investing with them. Hey, what's up, you guys? So in this video, I'm going to teach you how you can invest into the stock market and purchase individual stocks or whatever other type of investment you want to make in the stock market using your credit card. So with that being said, what you want to do is look right here on the bottom right side of the screen. You want to find that subscribe button. Give that subscribe button a quick tap for me, so that way you will be notified by YouTube each and every time I upload a video just like this one you are watching right now. And then for all of you overachievers, what you want to do is find the thumbs up button right beneath this video. Give that thumbs up button a quick tap for me, so that way more people can find out about this video and they can learn how to use their credit card to invest into the stock market. So with that being said, let's go ahead and get right into today's video. Okay, so before we go ahead and start getting into the details about exactly how you use your credit card to invest into the stock market, first we need to ask ourselves, why would a person even want to use their credit card in the first place to invest into the stock market, right? Like, who does that? So this is an example of a reason why a person would want to use their credit card to invest into the stock market. All right, you guys, so a really good reason why somebody would decide that they want to use this strategy of using your credit card to invest into the stock market is because ultimately the investor is looking into the stock market. They've already either are invested into a certain asset that they want to own more of, or they are looking at some new potential asset that they want to get into, and they see that that particular asset is at a very good, purchase price, and they do not want to risk that that asset is going to go up higher and higher in price, and that they're going to miss that golden opportunity to purchase that asset at that lower attractive price. So this is why they would then decide, hey, how can I be able to purchase as much as I possibly can of this asset without having to wait for my income to come in on a weekly, bi-weekly, or monthly basis, or whatever it is, the way that they get paid their income. And it's like, that's the problem. It's not that they don't earn income, it's that they have to wait to get paid in order to purchase this asset. And while waiting on that income to come in from their job or their business or whatever, that price of that, stock or ETF or index fund or whatever the asset class is within the stock market, it can move in price on them. It can go up in value. And then now they've missed the opportunity to go ahead and accumulate more of that asset at that lower price. So this is a perfect example and situation where this person would then be like, I want to go ahead and use this strategy of using my credit card to invest into the stock market. All right, you guys, so now that we already covered and addressed why somebody would want to use this strategy of using your credit card to invest into the stock market and purchase assets, now let's go ahead and cover exactly how you go about actually implementing this strategy so that way you can use your credit card to purchase assets within the stock market. Okay, so once you've decided that you are ready to start using this strategy of using your credit card to invest into the stock market and to purchase assets, so first and foremost, you want to go onto your credit card account. That could be through the app, it could be through the website, it doesn't matter. You just want to make sure that you do it. Now, once you are inside your credit card account, you want to go ahead and scroll down and find the option that says direct deposit transfer. Now, really quick, for anyone who has absolutely no idea what a direct deposit transfer is, here you go. So a direct deposit transfer is basically the credit card company saying, hey, look, we will give you up to the dollar amount that you have available on your credit card. We will give you that dollar amount by direct depositing it straight into your bank account, and we will charge you a very small fee in order to have access to that money in cash. Now, in this case of the $1,000 credit limit that you have on your credit card, if you go ahead and decide that you want to do the direct deposit transfer option, what the credit card company is going to do is they're going to say, okay, assuming you have all of your $1,000 credit limit available, what they will then do as you go through this direct deposit transfer option, they will say, okay, we will deposit however much of that $1,000 that you specify. We will take that part of your credit limit and we will deposit that in cash into your bank account. All right, so you now know exactly what a direct deposit transfer is, but you definitely do not want to just click out of this video, run off, go ahead, do your direct deposit transfer, and then, just ignore the rest of this part of the video, because there is very important information that you simply do not want to miss. So stay tuned right here and make sure you watch this video to the end, so that way you do the strategy right. You're not going to pay more money than you need to, and you are going to still get the assets that you want to get within the stock market. So how do you do this the right way? So when you are doing this direct deposit transfer, and the reason why I know is because I've actually implemented this strategy myself and I was very pleased with the results. So in case you guys are just thinking, oh, you just said this and you never did it. No, I actually implemented this strategy myself. So when you are going to do the direct deposit transfer, I want to emphasize these 2 points. You want to make sure that you are not going to get charged more than 3 or 4% as a transaction fee to have access to the cash that the credit card company is going to direct deposit into your account. That's the first stipulation or important thing that I want you to know. Do not do this strategy if they're going to charge you more than 3 or 4% as a transaction fee to have access to the cash. So the second point that I really want to stress and emphasize that you understand if you're going to go about using your credit card to invest into the stock market is that you want to make sure that as part of the terms and conditions of repaying the amount of money that you are going to be borrowing on your credit card, that you have somewhere between 12 to 24 months in order to repay that without paying any interest, because it will state that clearly. It will say, hey, you have, 12 months or 18 months or 24 months, and as long as you repay us back all of this money that you are borrowing on your credit card through the form of a direct deposit transfer, as long as you pay us all of that money back within that allocated time frame, you will not have to pay any interest on that whole entire amount that you got direct deposited into your bank account. And if you do this right, then that means the only fee that you're going to be paying, the only money that you are going to be paying to get access to this money is going to be that 3 or 4% transaction fee. So what this would actually look like if you went through and played it out exactly like I'm sharing with you in this video is you would say, hey, I'm going to go inside my credit card account. I have a $1,000 credit card limit. I'm going to go down, find that option, direct deposit transfer. I'm going to request the entire $1,000 credit limit that I have available to me. Then the credit card company is going to say, okay, this is the 3% transaction fee that we're going to charge you. That's going to come out to $30. And I'm like, I don't think that $30 is very much money as a transaction fee to pay to have access to $1,000. But even better, it's not like you're just only going to get charged $30 to have access to $1,000. You're paying $30 to have access to $1,000 for somewhere between 12 to 24 months. And then you go ahead and repay the $1,000 back to that credit card company within the time frame that they specifically laid out in the terms and conditions. As you go through this direct deposit transfer process, you are not going to pay any interest whatsoever. And once the direct deposit transfer process is complete and the $1,000 shows up inside your checking account, you can then take that $1,000 and then you could transfer it over into your investing brokerage account. And then now it is completely up to you on how you use this $1,000 to invest into the assets that you would like to invest and purchase within the stock market. So this is exactly how you use your credit card to invest into the stock market. All right, so $10,000 is the amount of money that you were trying to get to because maybe you're wanting to add $10,000 to your emergency fund to help you fully fund it. Maybe you're wanting to save and set aside $10,000 because you want to use this for like a planned future vacation. Or maybe you just like the comfort of knowing that, hey, I have $10,000 sitting completely free in my bank account. There is probably a multitude of reasons why various different people would be trying to get $10,000. And ultimately, you clicked on this video because you are looking for a faster way to get to this $10,000. So that is exactly what I'm going to give you in this video. So with that being said, if you're new here to this channel and you enjoy content just like this, what you want to do is find the subscribe button on the bottom right side of the screen. Go ahead and give that subscribe button a quick tap for me. And then if you could just do me one more quick favor before we go ahead and dive right into the video, find the thumbs up button right here beneath the video, give it a quick tap, and with that being said, let's go ahead and get into this video and help you get to that 10K a little bit faster. Okay, so the very first step in helping you get to this $10,000 as soon as possible is going to be for you to get super clear and identify exactly why you want this $10,000. And this answer is going to vary from person to person. My reason for the $10,000 is going to be completely different for you. But you, yes, you watching this video, you need to ask yourself, why do I even want to get this $10,000? Is it for adding to your emergency fund? Is it so you will have a fully funded emergency fund? Is it for like a family vacation? Is it for some large repair that's going to come up that you need to have this money set aside for? Is it because you want to use this $10,000 to invest in the stock market? What is your specific reason for getting to this $10,000? Now, why do you want to go ahead and get so specific and so clear? The reason why is because this $10,000 is your goal. It's not my goal, or it's not the next person's goal. But in order for you to take all of the other necessary actions that you are going to need to take to help you get to this $10,000 sooner or quicker, you are going to need to have that constant motivator or the reason why you're even doing this in the first place. Because if it's not important to you, you simply will not want to take all those other necessary actions in order to get the end result of the $10,000 faster. So get super clear, understand, identify with yourself, very clear, what do I even want to get this $10,000 for, and how important is it to you? And the more important it is to you, the more likely that you're going to do all the rest of the things that we're about to discuss in this video. Alright guys, so now it's time to actually start taking real action so we can help you get to this goal of this $10,000 as fast as possible. So in order to do that, you gotta know your numbers. And what do I mean when I say you gotta know your numbers? You gotta know exactly how much income you have coming in each and every single month, and how much of that income are you spending each and every single month. So then that way we can know how much money do we got to work with that we can then save and contribute to this goal of $10,000. So once you get super clear about the income that you're bringing in and your expenses every single month, then how we can find some extra money that we can then contribute to that $10,000 goal, we're going to start by looking at your mandatory. These are the expenses that are mandatory. You're like, dude, I gotta buy these things each and every single month without fail. Like, I'm gonna buy these things regardless. So I am like, they are very necessary in order for you to live each and every single month. So you're gonna look at those areas and say, hey, is there any opportunity for me to reduce my cost on these mandatory living expenses? If there is, great. That's gonna allow you to get to your financial goal of $10,000 even faster. But if there's not, it's no big deal. But a really quick example that could be, one of your mandatory expenses that you have each and every single month that maybe you could reduce is, let's say, like for your car insurance, you could say, hey, right now I'm using one of the premium car insurance companies. Maybe I could call another car insurance company, get just as equal of the car insurance coverage, but for a much less cost, allowing you to keep more of your earned income, and then you could use that savings, the money that you're going to save by switching insurance carriers. You're going to now be able to use that additional money that you were saving to add to your goal of getting to that $10,000 goal faster. That's just a really quick example of something that you could do to lower your mandatory monthly expenses. So the whole purpose of looking at the amount of income that you are bringing in each and every single month, and then looking at the areas that you are going to be spending this money in, is so that way we can then find out where are the opportunities that we can then not spend that money in those areas that are unnecessary, and then we could be more intentional about where we want our money to go. Because you're super intentional about where you go to make your money, but you're probably a lot less intentional about where your money goes when you are spending it. And we want to get a lot more intentional about that. So then that way, hey, we know where we go to make our money, and we want to know exactly where we are putting our money when we spend it. We only want it to be going to places that we want to spend it on, and then that means we're not spending none of our income that we work hard for. We're not spending any of that hard-earned income in areas that we don't want to, allowing us to keep more of that hard-earned income, and by default allowing you to have more of your income to then contribute to your goal of getting to $10,000 even faster. So when you are looking over your numbers and you're looking at your income and you're looking at your expenses each and every single month, you want to identify areas where you are spending a lot of your income spread out over multiple different areas, and you're like, hey, I'm spending money in all these different areas and it's just simply not a necessity. It's not something that I need to be spending my money on each and every single month. Or maybe those areas vary, like from month to month. You're like, oh, I always go to all these different attractions or different things that you are doing with your money each and every single month, but they're just not necessary in order for you to function on a month-to-month basis. So that means you could make adjustments, maybe reduce them or cut them out completely just for this period of time to allow you to keep extra income, so then that way you can then again get to your goal of $10,000 faster. Alright guys, so in that last step, basically what you were doing is you were like looking at the amount of income that you bring in, looking at the amount of money that you are spending each and every single month, and looking for all of the possible opportunities for you to reduce your monthly expenses. And then as a result, that's going to leave you on average a certain amount of money left over in your bank account each and every single month. So that directly ties into the next step that we're going to take here in this process of helping you get to your $10,000 faster. And so what is exactly that step? So what you're going to want to now do in order to make this as effortless as possible on your part, and so that way there's very little thinking involved here, and you want this process to be like seamless, like you don't want to have to be thinking about every single little step as you are implementing this. So what you want to do is you want to automate what you can automate. So all of this excess money that you are going to be having left over in your monthly budget every single month, you do not want to leave that money sitting inside your checking account, because if you leave it there, ultimately you will find a reason to spend it. Trust me, it will happen. So again, we want to be intentional with everything we're doing here, because we have a very intentional goal of getting to $10,000. So we need to be intentional about the actions that we're taking to get there. All right, so what you want to do here is you want to find, based on your specific situation, based on the numbers, your income, your expenses, on average, you're going to have a certain amount of money that is left over. And you want to find the number, the dollar amount that is completely comfortable for you to then transfer from your checking account over to some other account, whether it be a high yield savings account or just a very basic savings account. But you want to transfer over and have it set up automatically some amount of money from your checking account over to that other account that is going to be the account that you are going to ultimately build up and save up this $10,000 in. You want to set this up on an automatic transfer, whether it's weekly, bi-weekly, or monthly, but nevertheless you want to have it set up completely automated, so that way you don't have to sit there and think about it. All you need to do is go out there, make that money, keep your costs low. You've already identified how you're going to do that, and then as far as like transferring over the money, you don't have to get involved. any further than when you initially set up this, because the rest is just going to be all done, basically by the computer system once you've told them, hey, I want to transfer this amount of money, and then you give them the frequency based on how often you want them to do that transfer, and then there it is. The work is done for you. So in this step, all you want to do is set up automated transfers from your checking account over to the other account where you're going to be saving up, and ultimately where you're going to have this account where it will be $10,000 once you've played out this entire process. All right, you guys, so now we're getting real serious to getting to this $10,000, because at this point right here, we've already cut our costs as much as possible. We're saving that money. We are now transferring over this money automatically over to that account where we are going to ultimately have this $10,000 at. But now we were like, we got to really up this thing. We got to start hustling and grinding so that way we could get to this goal of $10,000 faster. So how are we going to do this? So what we're going to do is we're going to take the aggressive approach of finding out multiple different ways how we could increase our income. Now, obviously you could do as little or as much as you want in this specific area, but my specific recommendation is hey, how important is it and how fast do you need to get to this $10,000? And according to how fast and how important it is to you to get to this $10,000 is going to ultimately come down to how aggressive your approach is in doing all of these different things that we're about to mention right now. So ultimately what we have to do here in this phase is we got to find ways how we could increase our monthly income, because you've obviously been surviving and living off of the income that you have currently been making from just working, whatever it was, your job or your business or whatever. But now it's time to find additional income outside of that traditional income that you've been earning on a monthly basis. So we're going to start looking at really just, all the different opportunities that exist. Maybe you would just want to go online, check on YouTube, check on Google, look for side hustles, look for multiple different type of ways where you can make money on the side. I mean, just a few very basic general, side hustle examples could be man, can you drive Uber? Can you drive Lyft? Can you do DoorDash? Can you do, Instacart? Something like that. Some type of very at your own convenience type of way where you could earn additional income. Can you, find items online that people are maybe they're hurting for money. They're selling them significantly underpriced. You could swoop in, buy those items for cheap off of them, be more patient, post those very same items. Nothing was wrong with them. You could then post those items for a higher price and make the difference, make that additional income, because you're not hurting for money. You could take your time, be patient, and some other seller or some other buyer is going to purchase that for a higher price off of you, and you're going to make that difference, So that's a really good, way to make extra money flipping items online. Can you work longer at work? Can you say hey boss, I'm trying to make some extra money. Can I maybe stay an hour extra every day? Or hey, can I get maybe 2 hours? Or what can I do, to maybe make some more money? Is there another department that I could go help out in? What can I do to make more money while I'm here at work? And if there's an option for them to be able to do that and use you in that way to help benefit the business and ultimately you make more money, trust me, if it's available and they can do it, they will go ahead and offer it to you. Now, if you're wanting to do it, is a whole nother story. But you're already at work, you might as well tap into that resource and look, how can you make more money while you're already there? So if you could work more, because the whole purpose of why we need to do all of these different strategies of looking for multiple different ways of helping us increase our monthly income is because for every single additional dollar that you can earn on top of your already traditional income that you're earning each and every single month, it's going to be that much more dollars that you're able to speed up the process of getting to your $10,000 goal faster. All right, you guys, so this next step right here that you're going to need to do is extremely important, and you do not want to miss this, because if you do not implement this into your strategy for hitting the goal of getting to $10,000, the likelihood is that you will ultimately give up and that you will fail and never reach your goal of getting to $10,000. So what do you need to do? So you need to find a way to be motivated and to stay motivated from the start until the very end, and never be satisfied until you hit the end result and your end goal of getting to that $10,000 as soon as possible. So how do you go about staying motivated and being motivated through this entire process? Well, I know of 2 ways that myself personally, I've used these 2 things to stay motivated whenever I am trying to reach any specific goal. So the step 1, what I do in order to stay motivated and to keep myself motivated is I remind myself, why did I even get started and set out this goal to accomplish whatever the thing was. So in this case, it's hitting $10,000 as soon as possible. So why did I set this goal of $10,000? Was it because I'm trying to take my family on a vacation? Is it because I need $10,000 to get out of debt? Is it because I need $10,000 so I can have a fully funded emergency fund? Whatever that like reason is, like I gotta start with thinking there, like, why am I doing this? Why is this thing important to me? Because if it's important to me, I will take all of the necessary actions to get that end result. So it's like, that's the very first step. Understand why this $10,000 is important to you. So the next way that I'm going to keep myself motivated through this entire process is I'm going to find a way to track my progress. So I mean, you could do this like in a super basic way. I personally, this is just what works for me. Some other way might work for you. But what I would do is like, I would get like a big whiteboard or some type of like board that I could post up in my room. I would write on it like with the marker and put like $10,000. And then whatever amount of money that I would like contribute to that account, and I'm saving it up, and I'm like, okay, I saved $500. So then I would like subtract $500 from it, and I'd be like, oh, I'm at $9,500. Okay, and like I would just keep hustling and grinding, and like as I'm making progress, I just keep like subtracting down from it. And I'm like, I just need this much more. I just need this much more. I just need 7,500. I only need 6,500. And as I'm seeing myself make progress, I'm watching the numbers come down and down and down, and then I'm realizing I'm getting closer and closer. So it's making me like excited and making me want to keep pushing myself and keeping me motivated to keep going after doing these things that are getting me this result, helping me get closer and closer to my end goal. And it's like, it's just motivating me more and more and more. Like the motivation compounds, because the more that I see that it's working, the more that I'm making progress, the more excited I get, the more I want to keep doing what I've already been doing and look for more ways to speed up the process. And then ultimately, it's like I never got to a point where I'm like, I don't want to do this, I don't want to do this, because like in step one, it's super important to me. And then I'm seeing the progress that I'm making. I'm getting closer and closer to my goal. So why would I stop? I wouldn't. I would just keep going, if not harder than ever, and all the way until I hit that goal. And then boom, you get your $10,000, and then you're like super satisfied. So now you get to do whatever it was that you set out in the beginning that you were going to do with this $10,000. And it's like, awesome, congratulations, you hit that goal of getting your $10,000, you're a superstar. All right, so the way I want you to think about this video is that it is a complete introduction to the stock market. It is not like a super thorough explanation about every single possibility and every single type of way that you can go ahead and use your money within the stock market. It is a very general, a very basic understanding of what the stock market is. So then that way, if you have absolutely no experience, you could at least begin to understand what the stock market is and how it works and how you can use it for yourself in a realistic, practical way. So if that sounds good to you, what you want to do next is you want to look right here on the bottom right side of the screen. You want to find that subscribe button. Go ahead and give that subscribe button a quick tap for me, so that way you will get notified by YouTube each and every time I publish a video that is about investing into the stock market, just like this one you're watching right now. So thank you so much for doing that. And now let's go ahead and get into today's video. Alright you guys, so if you're looking for a very simple and easy to understand explanation of exactly what the stock market is and how you could go ahead and use it for yourself to build wealth for yourself, well, here you go. So basically put, the stock market is a bunch of businesses of all sizes, from very small businesses to the largest companies you could possibly think of, who have made themselves publicly available for the average everyday person, or ultimately as rich as you could possibly think of, to go ahead and invest into their businesses. And now why would they do that? Because they want to take investors' money to use it rather than their money, or from borrowing money from the bank, they can then take the money that you've used to invest into their business, so that way you could become an owner. So by you investing your money into their business, you become a part owner in their business, and then as them the business, they're going to take all of the investors' money, they're going to use it for research, for development, for coming up with new products, services, or investments to then grow their business even bigger, making them more valuable and more profitable. And the more valuable and the more profitable they become, the price of that company's stock goes up in value. And as it does, and you own multiples of shares of their company, then you, obviously because you own a larger amount of their company's stock, and it goes up in value, then your wealth goes up in value. I know that this information can be a little bit confusing and a little bit hard to understand the very first time you hear it, because it was at least that way for me. So my personal suggestion is that you rewind that part of the video and you watch it as many times as necessary until you could totally grasp the concept. Now, in case you were confused at all, I'm going to go ahead and explain to you now exactly what stock prices are and exactly what shares are. So every single company that you invest into in the stock market has a stock price. Now that stock price is the amount that you need to pay in order to own one individual share of that company's stock. Now, what is stock, or what are shares? So shares represent a very small sliver or fraction of that specific company or that group of companies that you are going to be investing into. So like, let's just say, for example, there's this imaginary company and you're like, oh, their stock costs $25 per share. So then, and their stock is, $25. So you're like, all right, for every $25 you put in at that specific time, you're going to get one share of that company's stock. So if you put in $100, you're going to get 4 shares. So, and the price of this company's stock is not going to stay the same. It literally changes second by second, day by day, minute by minute. And this is what makes investing into the stock market such a great opportunity to grow and build your wealth, because the stock prices go up and down every day. Sometimes you find yourselves in situations where you are looking at a really great company that offers really great products and services. There's nothing wrong with the company, but the stock market as a whole might be going down, causing that specific company that you were looking at, that you know is great, that has great products and services, the stock price will come down, allowing you, the investor, the chance to purchase more shares, at a cheaper price. So then you are able to purchase that really great company basically at a discount. So then that means when the stock market rebounds and goes the other way and it goes back up and the company is doing great now, according to the stock market, you've now owned a lot of shares at that cheaper stock price. So it immediately means that as soon as the stock goes up, you start profiting even sooner because your cost per share is at such a low cost. Okay, so now that you have a better understanding of what stock prices are, you know what shares of company stocks are, how do you go actually about investing into the stock market? Well, one thing is for sure, that every single investor in the stock market, regardless of whether you're a big investor or a small investor, you need to have some type of investing brokerage account in order for you to go ahead and start investing into the stock market. So what is a stock market investing brokerage account? All right, so simply explained, basically an investing brokerage account is just an account that allows you the availability to invest into these individual companies or into these groups of companies. Now, you need this type of account and you cannot invest into the stock market without it. And if you do not know of one, or you do not currently have one, and you are looking for a very good stock market investing account that you could rely on, that is trustworthy, I will go ahead and link to M1 Finance. It is a very trustworthy, very reliable, and I am recommending it to you guys. I will put the link to the investing platform M1 Finance in the pinned comment of this video, as well as the description of this video. So go ahead, click that link, sign up with M1 Finance today, so then that way you could start investing into the stock market and building wealth. So you do not have to use M1 Finance to go ahead and start investing and building wealth. You could find your own investing app or whatever type of investing brokerage account you want, but M1 Finance is just a really great option. I personally use it, and so that's why I'm recommending it to you guys. Hey, what's up, you guys? So in this video, I'm going to be sharing with you guys exactly how I invest into the stock market, what my strategy is, and just so you know, my strategy is not fancy, it's not very technical, it's pretty basic and straightforward, very easy to understand, and I'll go ahead and help you guys right here. I invest using the dollar cost averaging, strategy. But before you guys just say, oh man, whatever, I don't want to watch this video, it's just about dollar cost averaging, like I already know that. I use the dollar cost averaging strategy, but with a little twist. So that's why you don't want to click out of this video. So be sure to stay tuned. And since you're here, I know you're going to enjoy this video, so give this video a like. And if you're new here to this channel and you're not currently subscribed and you enjoy videos about personal finance, saving money, investing, and just overall growing your wealth, find that subscribe button on the bottom right side of the screen. Give that subscribe button a quick tap for me, so that way you'll be notified each and every time I upload a video. And with that being said, let's go ahead and get right into it. Okay, so my stock market investing strategy. All right, so like I just told you guys, I invest using the dollar cost averaging strategy. So in case for just anyone who's out there who does not know what the dollar cost averaging strategy is, basically you take a consistent amount of money, you invest it into the stock market on a consistent basis over a period of time until you decide that you no longer want to do so. So here's my dollar cost averaging strategy with a twist. So yes, I do deposit and invest a very consistent dollar amount into my stock market portfolio each and every single month, and I only invest in 2 stocks, and I have that money consistently every single Monday deposited into my brokerage account, and it goes ahead and initiates a stock market purchase on those 2 stocks each and every single Monday, right? But this is where the twist comes in with my particular dollar cost averaging strategy. So when the price of those stocks, when I keep an eye on them, obviously, and then when I realize that, there's particular, points in time where the prices of the stocks that I'm, making these investments into has gone up very, very high, I will like lower down the amount of money that I'm contributing to those particular stocks, because my money is not going to purchase me as much of those shares. So I'm not going to like push as hard to try to, force as much money as I can into that particular investment, because obviously the price is very, very high. Now, if it's like so, I'm going to probably just go ahead and leave the account alone, not like adjust, the dollar amount that I'm going to contribute. But if I realize like, hey, this stock is like at an all-time high, like I'm not going to be, very like, in a rush to try to get new fresh capital into that stock market investment, right? So that's why I go ahead and reduce the dollar amount that I'm going to contribute into those stocks. Now, just the same way I make that adjustment when the stock is on the way up, I do the exact same type of adjustment when the stock is on its way down. If I see, the stock is like dipping down, buying the dip. When I realize that the stock is like dipping down, I'm like, okay, I'm going to start contributing a little more money, because at this point, I'm getting a better and better pricing on these particular stocks. And then the more and more that I realize like, hey, all right, it's dipping down more. I don't get mad. I don't get like upset like some people do when they see their stocks going down. I actually get excited, because to me, I'm like, it's like I'm making money, because I'm getting this really great asset that I'm invested into. I'm buying these stocks at a better and better and a cheaper price. So when I start to realize, like I said, when the price of these stocks are going down lower, I start contributing just a little bit more money than I ordinarily would if it was just trading flat, or if the stock was going up. And then I just do that consistently over a period of time. And me specifically, my dollar cost averaging strategy is exactly like I just told you guys. But the other thing, I don't know how other people do it, but what I can tell you about me specifically is I don't just like pick a stock and just say, okay, I'm gonna dollar cost average into the stock, forever, or until, hey, the company looks like it's crashing, now I'm gonna stop. I pick a specific number of shares that I'm like, like that's my target. And like, let's just say hypothetically, I'm like, okay, I want to get 500 shares of this company. So I will consistently dollar cost average that amount of money into the stock until I will continue dollar cost averaging into the stock until I hit my target amount of shares. And then at that point, I would be like, okay, that's what I wanted. And then I will like reevaluate the stock and decide like, hey, or the company, in other words, I will like reevaluate and say, okay, do I want to get more shares, or am I just happy holding the shares that I have? And at that point, like I will just let, the shares just go up in value over time. And then I would just continue to hold them until, hey, I just reach a point where I don't believe in this company. I don't believe in like the direction that they're going anymore. And then I would just finally decide like, okay, this is where me and that particular stock go our separate ways, and I finally sell out. So hey, look, if you guys are not subscribed to this channel, find that subscribe button on the bottom right side of the screen. Give that subscribe button a quick tap for me. Hey, what's up, you guys? Welcome to the channel. So in today's video, we're going to be talking about exactly why we need to reprogram our mind if we want to get rich. So with that being said, I'd appreciate it if you show your support for this channel by giving this video a like, hit that thumbs up button, and with that being said, let's go ahead and get right into today's content. Okay, you guys, so look, it comes down to this. We have simply been programmed, whether or not we realize it, to essentially never get rich. And now, why do I make like such a bold statement like that? Or what makes me think that I could say something like that? Well, the chances are, if you are watching this video, you're probably not rich yourself, and neither am I. You know, I'm not trying to like speak down at anybody and be like, hey, look, I'm rich, and let me tell you why you're not. But what I am saying is like, hey, the truth is like, we have all been programmed essentially to be poor. And now, like I said, let me explain like what I mean by that. So all of us, as we've like gone to school, completed school, get out, like ultimately what were we set up and groomed for? We were being set up to become employees, to work for these corporations here in America, help them grow, develop, all that, get bigger, be profitable, and ultimately the people who are rich and wealthy, they own these companies that we're going to go work for, or they have large investments within those companies, so they're invested, they all have an invested interest into these companies that we ultimately go work for, and like ultimately like build wealth for these wealthy people, right? So these are the rich people. So we were never programmed or never taught, hey, like if you want to get wealthy, this is what you need to do. Or hey, you want to get rich, this is what you do. There was no like entrepreneurship 101 class. There was no, hey, this is how you should manage your money, so that way you could ultimately set yourself up to get rich and build wealth over time. There was no, hey, this is an investing class, come in here, we're going to teach you how to build wealth in the stock market, or hey, we're going to teach you how to build wealth through real estate. Nothing like that, right? And there's a very good reason why we were not taught that. And that type of education is not a part of like just the normal mandatory like curriculum in school. And the real like ultimate like purpose behind this is because by keeping us from knowing those things, and just basically it's like they're not saying like, hey, you can't find out about it. The school system is not educating you about finances, about investing, about building wealth, and ultimately getting rich. They're not making that a priority to teach you, because that is not what the system is set up for. The system is set up for you to go through all the school public system, doing exactly what you're told, just basically retain the information and then spit it back out. So then that way they could ultimately funnel you and set you up to go into the workforce. So then that way somebody could tell you what to do. And then because you were already groomed for it through the school system, you do exactly that. You go to work, you earn your income because you did exactly what you were supposed to do, what they told you to do at the job. You hit the numbers, you did the job the right way. Okay, then the reward is, hey, like in school, you got the good grade. Well, in life, you do the job, you just get paid some money. And they never pay you enough money that would allow you to like truly get rich or live a very rich, fulfilled life, as far as like from a financial perspective. But what they do is they pay you just enough so that way like you could pay all your mandatory living expenses and things like that, and have a little bit extra to just do a few things, for yourself or your family or whatever, just to have a little bit of fun. And then that forces you to have to go right back into the workforce. So you're like in this, you're in this like financial trap, and you don't know how to get out because you don't even realize you're in one. And this is because you've been programmed by this system, that we have here in America. And that's just the reality of the situation. So this is why I'm saying in this video, we need to change our program. Like we've been completely programmed, and obviously the amount of years that you've been programmed is going to vary based on the age that you are, when you're watching this video. So someone young, it's like, well, you've only been programmed this way for a short period of time. Someone who's older, it's like, well, you've been, programmed for a very long time to adopt that way of thinking. But like I'm saying in this video, we need to reprogram ourselves and reprogram our mind in order to get rich. So what does that look like? So we're going to completely unlearn all the like typical things that we've been told, like, earning money is hard, or like, hey, you have to work a lot. If you want to make more, you have to work more, like all of these types of things. Because the truth is, when you look at like the people who really are rich, that are living that rich lifestyle, that have the income, that have all the, the toys and things like that, and are really living a very rich life, both in terms of like the quality that they're living and even like the financial amount of money that that person has, is because this person is not like, oh, I'm just working so many more hours than say the person who's not rich. It's because they have things like assets, they have investments, they have businesses, they have things that have built their wealth and have allowed them to get to this lifestyle. So we need to like get rid of all of these mindsets and things like that that we've been programmed with, like the school system has put into us and society has put into us, like you need to work harder, you need to work more, you need to hustle harder, all of these things in order to make more money, when the truth is we need to just educate ourselves about what are the types of things that people who are rich are doing with their time, with their money, with their health, all of these things, and we want to mimic the very type of actions that they're taking, because clearly at one point they were not rich or they were not wealthy, and then they started implementing these specific steps in their life. Like, hey, they started living on less than they earned, they started taking some of that leftover money, started a business or started investing, and then, oh hey, next thing you know, they built some wealth. And it's like, okay, well, if you're not wealthy and then you start doing what this person who now they're wealthy, but at that point they took these steps and it got them there. Well, if you obviously do the same thing what they did when they weren't wealthy and it made them wealthy, well then if you do it, it's gonna cause the same result for you. So this is why I say we gotta like get rid of that old financial programming, this like poor mentality. I know that hearing some of this can make you feel like, well man, basically like I've been kind of like set up or like tricked or lied to basically for your whole life. And I mean, the reality is like, yeah, that's true. Like, it's not so much that they lied to you, but what they did is they just didn't like give you the best path to set yourself up to have the best life possible. But that's the point of this video. I'm trying to say like, hey, look, I recognize this. Like, we've been programmed by this system, and this system, the program that they've given us, sets us down a path of like, we're never going to get rich. Like, as long as you do exactly what the typical system, is designed to have you do on the other end, you're going to go through it, receive the program, come out on the other end, work basically, get in debt, spend some money on the things you have to, spend some money on the things you want, and you're basically going to just repeat that cycle over and over all the way until the day you just finally drop dead. And it's like, I know that if you were watching this video, you didn't click on this and think like, I don't care what this guy says, I just want to work and spend all my money and just never get rich, and I'm willing to work to the day I die. Like, I do not think that that is what you want for yourself or your family, if like say you have one, right? I'm sure you would love to get to the point where you would like be rich, have some wealth, ultimately be able to walk away from the workforce or your business or whatever it is, and ultimately just be able to enjoy life. So in order to make this happen, the next step would be to like, obviously to realize like, okay, I've been lied to, I've been kind of like, misled, or they're just simply not letting you know that what they're setting you up for because of the program that was put into you. So now you become self-aware, like, hey, cool, I've been programmed this way, but I see it now. Like, I recognize what's going on. So you wake up to it and you're like, okay, now the question is, what are you going to do about it now that you know? And it's like, all right, like, I can't make you do those things, but once I recognized that, it became very apparent what was my next move. My next move was like, how can I start taking some actions, whatever it is, and I would just start looking at like, hey, how do people get rich? Going online, going on Google, going on YouTube, like, what do rich people do? How do they get rich? And the next thing you know, you're reading books on mindset, you're reading books on how to get started with investing. You're learning all of these different things, the different types of investments, like how do they behave with money? Like, what do rich people do with their money? All of these things, you start looking into these topics because ultimately what you want to do is like, you want to get rid of obviously that old program that you've had. So you're just deleting that. You're like, all right, that whole program, it's gone. So cool, now your mind is empty in the sense of all that old programming that essentially has kept you poor to this point. Or even if you're not poor, it obviously is not allowing you to get rich, right? That's what I mean when I say that. So then, now that we've gotten rid of that program, we're like, okay, now we want to start fresh, and we want to reprogram ourselves with what we want to ultimately get on the other side. So at this point, you're saying, okay, I'm not getting force-fed some program that's not going to benefit me. I'm going to choose the program that I want to come into me, because when you choose the program that you're going to take in to program yourself, it's going to be because it's going to ultimately produce in your life the changes that you want to see in your behavior, in your mindset, the way that you manage your money, the way you earn your money, the way you value your time, a ton. It's going to affect your life in basically just about every single aspect of your life. And this is what you're looking for, and this is what you're wanting to do. Get rid of that old program, bring in the new program, so then that way ultimately you could get what you want out of your life, which is ultimately to get rich, build wealth for yourself, so then that way you could have a much better quality of life. Now, what I'm not saying is that as soon as you get rich and build wealth for yourself and ultimately reach financial freedom, that hey, your life is just going to be amazing, you're not going to have any problems, and it's just going to be like smooth sailing and perfect. Because ultimately the truth is, money just solves money problems. Money is just a tool, but we want to have as much of that tool as we can possibly have, because then we could at least use that tool to solve money problems in our lives. And then the more of like money we have, then we could obviously spend it on doing things that would just be enjoyable for us in our life and ultimately allow us to have the best things in our life to create a better life for us. So I'm hoping that you guys would look at yourselves and say, hey, look, it's time for me to go ahead and delete this old program that has been preventing me from being able to get rich, build wealth, and ultimately reach financial freedom. So it's now time for me to choose the program that I want to reprogram myself with, so ultimately you could get rich and build wealth for yourself. All right, so I'm not saying that money is going to solve all of your life's problems as soon as you take these steps and reprogram yourself, but what I am saying is at least by having money and getting yourself to a point where you are rich or you've built some level of wealth, that you can ultimately raise the quality of your life, giving you a much better life than you would have otherwise if you were not rich. And then ultimately you could at least escape the workforce and not be a slave to money and not always be chasing, like being on the hamster wheel constantly, like I need to earn more money. So ultimately what I'm hoping is that you guys would take a look at yourself and your life and realize like, hey, I've been programmed a certain way that is never going to allow me to get rich or build wealth for myself. Then you would take the conscious choice and decision to say, hey, I'm going to get rid of this program, and then I'm going to now choose to put in a new program that is going to allow me to get rich and build wealth for myself, so then that way you could personally have the best quality life possible that you can. And it's not that money is going to solve all of your problems, but money is a tool and money can solve money problems. So you want to get as much of that tool, money in other words, so that way you will have that money to solve those problems and just give yourself the highest quality of life that you can with the money that you have. All right, I know that you guys do not want to work the rest of your life. You want to be able to live your very best life, doing what you want, when you want, where you want, how you want, with whoever you want. And that is exactly what you're going to be able to do as soon as you have the right dollar amount of money saved and invested and getting the type of return that you need to in order to ensure that you are going to be taken care of financially. Hey, what's up you guys? Welcome to the channel. So hey, in today's video, I'm going to be sharing some information that I absolutely know is going to be extremely useful and applicable to you guys. So what exactly am I going to be sharing with you guys and covering in this video? I'm going to be sharing with you the rule of 300. So what exactly is the rule of 300? So the rule of 300 is going to be the rule and the financial formula that you are going to be using to calculate exactly how much money that you need to have saved and invested in your portfolio, so that way you could stop worrying about finances and money and you could start focusing on living your very best life. So with that being said, let's go ahead and get right into today's video. All right, I know that you guys do not want to work the rest of your life. You want to be able to live your very best life, doing what you want, when you want, where you want, how you want, with whoever you want. And that is exactly what you're going to be able to do as soon as you have the right dollar amount of money saved and invested and getting the type of return that you need to in order to ensure that you are going to be taken care of financially. So hence the rule of 300. Okay, so the rule of 300 states that whatever is the dollar amount of money that you want to have in order to pay for your lifestyle on a monthly basis, you take that dollar amount and you multiply that dollar amount by 300. So let's go ahead and give you the example of, let's say you want to have $5,000 a month, right? So you take that dollar amount of $5,000 a month and you multiply that $5,000 by 300. Now what you're going to end up with is a dollar amount that is $1.5 million, right? And I know to some people that's a lot of money, and to some others that doesn't seem like very much money at all. But nevertheless, that's the math, right? $5,000 times 300 is going to get you $1.5 million. Now that is going to be the amount of money that you are going to have saved and invested in order for it to provide you $5,000 a month. Okay, so full transparency, I just want to make it very clear to you guys that this rule of 300 states that in this scenario of the $1.5 million, in order for that $1.5 million that you have saved and invested to provide you with that $5,000 a month, you need to ensure that this $1.5 million that you have saved and invested is getting an annual rate of return of at least 4%. Now, some more transparency for you involving this rule of 300 is that this rule of 300 does not factor in periods of higher inflation. So in normal scenarios, the average inflation on an annual basis is around 2%. Currently, at the time of making this video, we have inflation that is significantly higher than 2%. So that's why I'm telling you that this rule of 300 does not really factor in periods or times where inflation is higher than 2%. So that's something to keep in mind. Now, another thing to factor in that you need to, really just keep in your mind is that this rule of 300 does not factor in taxes. Okay, so really when you're looking at this rule of 300, you're not looking at this, this financial number that you're coming up with in this example of say $1.5 million for the $5,000 a month, getting an average annual rate of return of say 4%. When you are looking at this scenario, you're not telling yourself, that's it. If I want $5,000 a month, I'm getting $1.5 million. I'm gonna have $5,000 a month and that's it. It's like hard numbers, definite situation. That's not really the way that the rule of 300 is designed to look at. The way that it's really is really kind of like a general guideline or like a starting point. Because obviously you would probably want to add in some more financial cushion into your investments, or maybe even look for say either adding additional income to the investments so that way you have more money invested, or maybe you even want to try to find an investment that say has a slightly higher return than say the average annual rate of 4%. Now, why would you do this? Because you want to factor in for just, those times when inflation is going to be higher than the average of say 2%, like we are currently in the time when I'm recording this video. And you also want to factor in making sure that you have enough money saved and invested and getting a good enough return to factor in for taxes. So this is why I'm saying this rule of 300 is not like a hard rule set in stone where it's just, hey, I plug in these numbers and the number that comes out, that's it. That's all I need. Keith said that's all I need. Use the rule of 300. As soon as I get that number, that's it. I'm set. I'm financially free. No, that's not the way the rule of 300 works. Like I said, it is more of a guideline. It is more of something like a starting point. And then you could go ahead and, look at your very specific situation, play around with your financial numbers, look at, hey, okay, I know that I, at the bare minimum, need whatever monthly amount that you specifically need, multiply that number times 300, and then you know that you need to be earning at least an average annual rate of say 4%. And then you would say, okay, let me go ahead and add in a little more money into this investment because I want to make sure that I'm factoring in for those times when there is higher inflation. So you want to account for that. And then also, again, you want to account for taxes. So like I said, that is exactly how the rule of 300 works. It really is like a starting point and a guideline to point you in the right direction and help you come up with your financial figures so that way you could start no longer focusing on finances and start living your very best life, doing what you want, when you want, where you want, whenever you want. Hey, so if you made it to this point in the video and you're not currently subscribed to this channel and you enjoy content about personal finance, saving money, investing, and overall building wealth and all things financial, really what I would like to invite you to do is look right here on the bottom right side of the screen, find that subscribe button, go ahead and give that subscribe button a quick tap for me. It really helps out my channel a lot, and really it just motivates me to just continue making these videos, and really it just shows your guys' support for me. It's absolutely free, so go ahead, like I said, find that subscribe button right beneath the video, give it a quick tap, and if you want to be a super overachiever, find that thumbs up button right beneath the video. Give that thumbs up button a quick tap for me as well. It really means the world to me. Alright you guys, so look, on your journey and throughout your journey of ultimately like pursuing wealth and then ultimately realizing it, you're going to go through two phases, and that's what we're going to be breaking down in this video, the two phases of building wealth. So if you could just do me one huge favor before we get right into this video, look right beneath this video, you're going to find the thumbs up button, give that thumbs up button a quick tap for me. It really helps out my channel a lot. Thank you so much for taking the time to do that. And now let's go ahead and get right into the two phases of building wealth. Alright you guys, so in this very first phase of building wealth, this is what I call the building or the accumulation stage or phase of building wealth, because the reason why I call it that is because in this first stage of building wealth, that's exactly what you're trying to do. You are going from essentially like a zero net worth or a very low net worth, and you are trying to build that net worth And you're going to do that through accumulating or collecting or building up assets, because ultimately it takes assets to build and grow your net worth. Like, that's just really what it comes down to. And if you're not too sure what I mean when I say assets, I mean you need to buy and own and invest into things that will grow in value over time as you hold those investments. And things like, when I say that, I'm referring to things like some of the most commonly held investments that do really well for people that are looking to grow and build their net worth and ultimately like build wealth for themselves is going to be through investments in things like the stock market. It's going to be through things like, investing in real estate, or it's going to be by like, owning a business or investing in someone else's business. Like, these are some of the most very common type of wealth building, net worth growing type of assets. So this is why, again, I refer to it as, in this first stage of building wealth, is the building or accumulations like phase or stage of building wealth. So when you were in this very first stage, what you were trying to do, obviously, is you were trying to grow your net worth, you were trying to build it, you were trying to build up to the point where you have reached wealth, and you need assets in order to do that. So in this stage, you are like going to start saving as much of your money and looking at like, where can I like invest my money? What type of assets can I get into that are going to grow my net worth for me? Now, I can't give you that type of advice. I can't tell you, hey, this is the thing, go get in this. This is going to, whatever, this is going to blow up for you, and this is going to be the asset that's going to make you rich. Like, I can't do that. You have to understand exactly what type of investor you are, how aggressive you want to be, what's your timeline like, how much time are you looking to, wait to be able to build wealth, and what type of returns are you looking for, in this process while you are looking to build wealth for yourself. And like, ultimately, like, what type of investor are you? Like, do you want to only be in real estate? Do you want to be in the stock market? Like, do you want to be in both? Do you want to be a business owner? Do you want to invest in someone else's business? Maybe you want to do all those things. I don't know. But this is why I said, like, I can't give you that type of advice. There is no just like one single way on how you could go about doing this. But just go ahead, take the time out, once you've made this decision that you want to go ahead and build wealth, and start looking at the asset classes that you think that you would like to get invested into or be a owner of. So then that way you can then ultimately build wealth, and then do your very best to ultimately accumulate or collect or build up as many of those assets as you possibly can, because the more assets that you own that will grow in value over time for you, you greater your chances of ultimately, basically, it's almost guaranteed, if you accumulate enough assets over enough period of time, you will ultimately reach the point where you are wealthy. Because that's just basically the way that it works. You have a certain amount of assets, those assets will go up in value over a certain amount of time, and as they increase in value and they're worth more, well, then your net worth grows. And this is the stage or the first phase of building wealth. All right, you guys, so we're about to get into the second step of building wealth, or the second phase of building wealth. But before we go ahead and do that, I just want to make like one little little note really quick for you to keep in mind before we go ahead and jump into the second phase of building wealth. So when you are in this first phase of building wealth, something that you need to keep in mind is like, during this phase, you are not like really like enjoying yourself very much. I'm not saying that you don't do anything to enjoy yourself, but this is not like a time in your life or while you are in this particular phase of building wealth, this is not the time in your life when you are like doing all the things that you want to do. You're not always going out to eat all the time. You're not maybe driving like the nicest car or your like ideal car, even though you could afford it, but you are not living that particular type of lifestyle. And the reason why is because you are willing to tell yourself no, to those things, because you like ultimately want to reach the greater goal of building wealth. And rather than spending money on those things, you are like, no, I'm going to sacrifice not getting those things right now. I'm going to instead use that income that would be going to those things that I would like to have, and I'm going to invest those monies. I'm going to invest all that money that I would have otherwise spent on those things. If I would have had, bought those things, I would instead invest this money into wealth building type assets that are going to continue to help you grow and build your wealth all the way up into the point that you do actually realize the point where you are now wealthy. All right, you guys. So now we're going to go ahead and get into the second phase of building wealth. Now, this is the really good stuff. This is the part like everybody wants to get to this phase of building wealth, and you don't want to click out of this video. So be sure to watch to the very end because, like I said, this is the good part. All right. So in the second phase of building wealth, this is what I call or refer to the enjoyment phase of building wealth. And there's a very good reason for that, because in this particular stage and this point and this phase of building wealth, you are not like chasing down wealth or trying to still build or accumulate assets so then that way you could become wealthy. In this stage of in this second stage of building wealth, you are already wealthy. Like, you have made it. Like, you went through that whole first phase of just like saving, investing, accumulating assets, like waiting the time for those assets to like go up in value so your net worth would grow. And you've done this process again and again and again and again, and you have now reached the point where you got enough assets that have gone up in enough value that you are now wealthy. And it's like, that's like an amazing accomplishment. Like, congratulations to you for doing that. Like, you are now in the second phase of building wealth, and in this second phase you now get to enjoy your wealth. Like, this is like the most amazing part of building wealth for yourself. Is like, what's the point of building wealth if you never get to enjoy it, right? So now in this stage of building wealth, you, like I said, you get to enjoy it. Like, and that could be whatever enjoyment means to you, because that's going to vary from person to person. I mean, it's probably going to realize itself in your life in many different areas. Like, it's gonna, because for like pretty much the average person, you spend a very large portion of your life essentially chasing money, trying to like chase down an income, because you have to work to be able to provide income for yourself, to be able to pay for your lifestyle, right? But once you've reached the point of like wealth, and you have now realized wealth in your life because you have enough assets that have now gone up in value enough for you that you've reached the point of wealth and you are now wealthy. Well, and how do you know that, right? Like, how do you know that you've reached that point? Well, you know that you have enough assets that have gone up in enough value for you to where you are wealthy, when the value of those assets or the assets that you own can now provide you with enough income for you to live the remainder of your life, paying for your lifestyle and the things that you want to do going forward, without you having to go to work another day in your life, without you having to earn another dollar. Now, that could happen because maybe you own real estate, and as the tenant pays you, like, you're just receiving the income, or as you own a business, the business is providing you with a really nice income, or however you like ultimately like obtain that income, or because maybe whatever, you do cash out refinances on your property, you realize money, like whatever. There's like a lot of different ways how you ultimately will realize or get that income from those wealth building type assets that you've accumulated. But that's not really the point. The point is that you have enough assets that will provide you with enough income to be able to pay for your lifestyle that you want to live, without ever you getting any more assets, or without you having to work another day of your life. And like I said, the assets will pay for your lifestyle outright. And when you reach this point, you know that you have reached the point where you are now wealthy. And that number is going to vary from person to person. It's going to vary based on where you live at, all these different things, right? Because everybody's type of life and their spending level is going to be different. So that's something that you have to calculate and figure out for yourself. But when you realize you got enough assets that will provide you with enough income to pay for your lifestyle, you are now wealthy. And you then, because you are no longer focused on like trying to work so hard and trying to, save more money and invest more money and all this type of stuff, because you're trying to grow and build your wealth, well, now you have a lot more free time. You can now, instead of doing the things that you have to do because you're, I have to, work because I got bills to pay and this and all that. Well, instead, now you're like, I don't have to do anything. I could do the things that I want to do. And this is when you could start like paying more attention to your fitness. You can, maybe spend more time working out, or you have more free time to now spend with, friends and family. Maybe you want to travel. Maybe you want to whatever, like volunteer places. You want to do whatever it is, like whatever that you find enjoyable, you can now do that, because you have reached wealth. And essentially by reaching wealth, you have bought your freedom back, and it allows you the freedom to do whatever it is that your little heart desires to do and that you find enjoyment in doing. And this is the enjoyment phase of building wealth. This is the second phase of building wealth. So in phase one, you have like made the decision, hey, I want to get rich, I want to build wealth for myself, I need to go out there and get assets. So you're going to sacrifice, save, invest, work hard, increase your income as much as you possibly can along the way. Then you're going to take that income and invest into assets that are going to grow in value for you, helping you grow your net worth. And then at a certain point, you're going to have enough assets that now would provide enough income for you that would pay for your lifestyle outright going forward all the way to the day that you die, probably even beyond that. And at that point, you are wealthy, and that at that point you could say, hey, it doesn't mean that you're not going to invest any more, that you're not going to accumulate any more assets, and that you're not going to continue to grow your wealth even further. But at that point, you could say, hey, I can kind of like let off the gas here a little bit. I could start enjoying my life. I could go on vacations. I could travel. I could spend time with my friends and family. I could just kick back and relax. I don't have to go to work. If I go, it's because I want to. And then at this phase, you are now in the second phase of the wealth building process, and you are just ultimately in the enjoyment phase, and you can enjoy life and everything that comes with it. Hey, what's up, you guys? So in this video, we're going to be talking about the big three of personal finance. So what exactly is the big three? So the big three is the average everyday person's three biggest and largest expenses on a month-to-month basis, or even on an annual basis. So we're going to be touching on each one of those categories, and we're going to talk about each one and explain what are some things that you could do to minimize, your expenses in each one of those categories. So ultimately, you could then take this advice, minimize your expenses in those categories, allowing you to keep more of your hard-earned income. And then ultimately, you're going to be able to take that leftover income that is now excess cash flow for you, and you're going to be able to use that income to then create more wealth for yourself. So then ultimately, you can reach financial freedom. So with that being said, look right here on the bottom right side of the screen, find that red subscribe button if you're not already subscribed to the channel. Give that red subscribe button a quick tap for me, so that way you'll get notified each and every time I upload a video. And with that being said, let's go ahead and get right into today's video. Alright, you guys, so when it comes to the big three, the largest expense by far for most people, I'm sure there's people where there's an exception to the rule, but for most people, the largest expense starts off with housing. So housing is obviously the place that you call home, with the place that you lay your head down at night, So regardless of whether that's you renting a place or whether you are purchasing a place, that is ultimately your home, the place that you call home. So what can you do in this category to minimize your expenses so that way you keep more of your hard-earned income? So we're gonna have to break this down into two parts. So if you're renting, the very best advice that I could give you is when you are first initially setting out to find that place, once you've found a reasonable place that suits your needs, regardless whether it's you as an individual or you and your family, just find a place that fits you guys in there, that's safe. It doesn't have to be the greatest neighborhood, and then a property that is massive and you have all these extra rooms and the property is extremely upgraded and all that. What you want to find is a property that basically provides your basic needs and that is in a safe neighborhood, and that when you talk to whoever is renting out that property, whoever's managing it, that the rental price that you're going to be paying on a month to month is going to be very reasonable when it comes to your personal budget. So that's going to obviously vary from person to person. So when you look at your income personally and you say, okay, this is what my rent is going to be every single month, as long as that, rent dollar amount is very small in comparison to the income that you're earning, and you are leaving yourself a lot of excess income left over on a month-to-month basis, then you are making a very solid decision, because you're going to need a lot more of your income for things way beyond just rent, and that should go without being said. But nevertheless, this is the approach that you got to take, because not everybody knows this information. So this is exactly why I'm putting it out there. If you want to make, and it's very easy to get carried away when you're out there looking at properties and you're like, oh, look at this one, it's in a really great neighborhood, and oh, it has the very best schools, and it has, all these features, and oh, I'm gonna have all this extra space and all this everything. But it comes at a price, the rent price is going to be very high. And the same is true if you are purchasing a home. It's very easy once you're out there pre-qualified and you're looking at homes and stuff, and you might start off looking at your budget on the lower end, and then once realtors have shown you properties on the higher end of your budget, it's very easy to get carried away and be like, oh, look at all the upgrades, and look at this just amazing neighborhood and look at all this type of stuff, and now you're just carried away and like you were there maxing out like your housing budget. And it's like, yes, the home might be amazing and great and all that, but at the end of the day, like you are stretching yourself extremely thin, if not over your budget, when it comes to like just the category of purchasing a home. So the very best thing you could do, very similar, just like, you know, if you were the one renting the property, is you just want to find a home that fits and suits the needs of you or your family, if you're, you know, obviously if you have a family. And then as long as it is like fitting you, and you know, it's not like a junky place, and like I said, it fits your needs, you're in a safe overall neighborhood, and you know, that's it. You basically just want the basics, and you want to try to find a home that when you are making that purchase, that the, you know, that your monthly payment for that home is going to be, again, very, very like affordable on you, based on your individual budget, because you're the one that has to make that, you know, monthly mortgage payment. So when you look at that monthly mortgage payment based on, you know, your monthly income, it's like, as long as you can make that payment very comfortably and still have a large amount of your monthly income left over to pay a lot of other things, and even after you pay those other things, that you're going to still have even then in excess of like free cash every single month, then you are looking definitely in the right direction, because obviously you could afford that and still have plenty of money left over even after you pay your other expenses. So this is the general approach you want to take when it comes to the housing category, so that way you can minimize your expenses as much as possible in this category and keep more of your hard-earned income. Alright, so out of this list of the big three, the second biggest expense for most people comes down to transportation. And hey, I get it, we all need transportation of some kind. Now, I'm not trying to suggest that everyone, you know, take public transportation, or that you even walk or ride a bike, because it's just not practical for most people. Now, if you are in that type of situation where that is both practical and that it makes sense for you, and that you even choose that you want to do it, then hey, that is a really awesome way to go. And I would say, hey, go for it, because you're going to save a ton of money. And then, like I said, the whole purpose is for you to keep more of your hard-earned income. So ultimately, with that excess income, you're going to be able to use it to build your net worth and ultimately reach financial freedom. So for on a practical level, for the rest of us that don't have that type of situation, what could we do? So my very best advice to you is find a good used car that is like a few years old, maybe 4 or 5 years old, very low miles. Go out there, purchase that car for yourself. If you could do it in cash, great. If you can't, then hey, finance the car, and make sure that when you are doing this, obviously this is going to be a car, you know, based on your income level. So for someone who makes, you know, $200,000 a year, for them to pay $500 a month is not a big deal. For someone who makes $2,000 or $3,000 a month, to pay $500 a month is a very big deal. So you need to go out there and use your own best judgment and say, okay, based on the income that I make, and don't go off through like your gross income, go off of like your net income that you bring home, you know, that goes into your bank account. And when you look at like purchasing this vehicle and say, okay, after I make this car payment, and after I've already made, you know, my house payment or your rent and all these other expenses that you have, all your utilities, all these other things, is this a very affordable payment? Does it fit very well into your overall expenses in your life? And if the answer is like no, because the more that I spend in this category is ultimately going to leave me with a lot less, you know, income, or it's going to like stretch my budget very tight, that's a very good clue and indicator that hey, like you're looking at spending too much, you know, on a vehicle. All you need is a very practical car. You're not looking to flex here. You're looking to get a good, reliable car that has low miles, that's gonna last you a good, you know, set of years, probably like 7 to 10 years. It doesn't mean you got to keep it that long, but you're purchasing a vehicle that can, like, in theory, last that long to you based on like the quality of a vehicle that you're buying. Because you're going to buy a vehicle that's only a couple years old and that still has a very low miles, and you're going to get it at a very reasonable price, and the monthly payment is going to be very reasonable for you to pay based on your income. And if you do this, then you're going to have a very economical car for you. It's going to get you from point A to point B without costing you a lot of money on a month-to-month basis, and this is going to allow you to keep more of your hard-earned income, and then ultimately, because you are keeping more, then you have more of your hard-earned income to use to grow your net worth, so ultimately you can reach financial freedom. All right, you guys, so we're at number 3 out of the big 3. So what is the third biggest expense for the average everyday person? Well, it comes down to their food cost. So, and I get it, when it comes to food, food is very expensive, especially if you want to eat and buy good food that is both, it tastes good and it's good for you. And I'm not even talking about like out to eat food, restaurant or drive-through food or anything like that, or getting food delivered to you. I'm talking about going into a grocery store, purchasing that food, coming home and making it, and it is still very expensive if you go that route. So I'm not trying to say, hey, you're gonna spend a little bit of money if you do what I'm saying in this video, but I'm saying what could we do on a practical level to spend less than if we took a different approach, and at the same time we would still not jeopardize our health by purchasing food that is going to be very bad or just very low in dollar value, but at the same time it's going to be very unhealthy for us. So because that is not the goal, because we all should know, and I hope you guys do realize, health is wealth. Because if you have money but you don't have your health, then you really don't have anything, because you're not even going to be around to ever see that wealth. So the goal is not to spend a little, the goal is to get something really great and then have a great overall experience for lesser than if you took a different approach. So how do we save money in this category of our food costs? So what you want to do to just minimize your costs as much as possible is, and I know it's not like the sexy thing to say, but you want to plan out your meals. Like, you want to be smart about it, because if you go grocery shopping with no plan, you're going to go right in and you're going to walk into that grocery store blind with no premeditated plan and no strategy on exactly what you're going to buy, and you're going to overspend terribly, because you got to realize, like, these companies are very, very, very great at marketing. So you're going to go through that store and everything is going to look so cool to you, and it's going to look good, and you're going to be like, oh, I want to try that, and oh man, I want that. And you didn't want any of those things before you went into that store, but with very clever marketing, you are going to be pulled in so many different directions to purchase a lot of different things that you might not even actually end up eating, or is not even going to be good for you, but you're just going to end up, because of the marketing, you're going to purchase it, and it's a bunch of unnecessary items that you do not need. So you want to be very strategic by creating a meal plan for the week. So I would say, whatever, let's just say for the example of this video, you say, okay, I'm going to go grocery shopping on Sunday, and I'm going to have my food for Monday, Tuesday, Wednesday, Thursday, Friday. And then you give yourself the flexibility to say, hey, I'll go out to eat on Saturday and Sunday. So you would come up with the particular meals that you're going to eat throughout the week. When you go to the grocery store, you obviously want to create this list before you ever go to the grocery store. So then that way, when you go into the grocery store, now you're just going to stick true to your list and buy all the items that you need in order to make those meals for the week. And then you just stick true to your list, purchase only those items, obviously come home, make your meals for the, each and every single day based off of whatever you plan on eating, throughout that week and for that day. You just each day cook the meal accordingly for that day. Hey, switch it up, move it around, however, change it up week by week. It doesn't matter. I'm not trying to restrict you to eating some certain kind of food for a certain kind of day or some kind of meal plan, but it's just a meal plan in the sense that you are just planning out exactly what you're going to eat, and that you are purchasing only the things that you need to make those meals. So that way you're not just out there buying excess items that you don't need. You're not wastefully spending. That is the whole purpose. And if you do this in the category of your food costs, you're going to dramatically reduce how much money you are spending when it comes to your food costs in general. And I'm suggesting that you could even leave yourself, the flexibility to go out on the weekend. Now, if you just cut out that completely and you just say, no, I'm always going to cook at home, you're going to keep even more of your hard-earned income. And that is exactly the whole point, to minimize your food costs as much as possible while still getting good food that tastes great and that is good for you. And then it's like a win-win. You're getting really good food, having a great overall experience, not jeopardizing your health, keeping more of your hard-earned income. And then the whole point of this, through all three of these categories of the big 3, is to save as much money as you can in all these categories. And then with that leftover income that is all free and clear, you are going to turn around and then use that free and clear income to invest into assets that are going to grow your net worth and then ultimately help you reach financial freedom. So hey, look, if you guys made it to this video and you have not already dropped a comment down in the comment section below, and you're not already currently subscribed to this channel, be sure to hit that red subscribe button. drop me your comments down in the comment section below. I'd love to get your guys' thoughts and your overall feedback on this video. If you guys have any tips or tricks that you guys use to save on like your housing costs or on like your food costs or like your transportation costs, be sure to drop those down in the comment section below. Alright you guys, so I'm going to start this video off by asking you guys, the audience, have you ever personally tried to get rich quick? And if so, what did you do? Like, what exactly were you trying to do so that way you could get rich quick? And what was your overall experience with doing that? Did you end up getting rich? Did you lose money? Let me know your experience overall down in the comment section below this video. And with that being said, let's go ahead and get right into it. All right, you guys, so one of the biggest reasons why trying to get rich quick simply doesn't work is because in the process of trying to get rich quick, it's going to typically lead you into situations or investments or business opportunities that are going to be very high risk, very high reward, right? And ultimately, yes, you do want that, like, you know, reward, that end result of getting rich, but you do not want to sacrifice the process of trying to get rich by, you know, getting yourself involved in very high risk situations, because the truth is, in these very high risk situations, majority of the time it just simply doesn't work out, you know, and that ultimately causes a total loss of like capital, time, and energy that you spent all in this like bad investment, you know, because you were trying to get rich quick. Now, had you not spent that time, money, and energy into this bad investment, you could have instead applied that same money, time, and energy into a successful investment. So by you losing here, not only did you lose the money in that investment, but you also lost the opportunity cost of being in a successful investment that would have not only not caused you to lose money, but you would have made money. All right, so another problem with trying to get rich fast is that these different type of investments or business ideas that you're looking at getting yourself involved in so you could like get rich fast, is that the problem with this is that these things are based on hype. They're built up on anticipation, they're built up on hope, and a lot of like speculation and misleading information. And with all that being said, ultimately, you are not going to get the end result that you are looking for. Like, you are not going to get rich fast, and you are not going to build wealth for yourself. So this is why you just want to ultimately stay away from trying to get rich quick. Alright guys, so here's another problem with the process of trying to get rich and build wealth for yourself in a fast way. Well, the problem is that you are going to make yourself open and susceptible to getting capitalized on by scam artists and like financial gurus and things like that, who are going to sell you the idea of like, hey, if you just buy my course or you buy my program or you do this consultation with me or whatever, some type of scenario like that, that they're going to pitch to you, that if you just buy their thing from them, they're going to give you the information or the program or the whatever it is that you need. So then that way, ultimately, you could like replicate the process of like their wealth, and that you can now become wealthy or get rich fast. But the truth is, like, none of that is actually going to happen for you. They know that, hey, you want this outcome, and they're just selling you the idea that yes, it could happen. And they're gonna like hype it up with like, they're gonna show you other cars, they're gonna show you the girls, they're gonna show you like, look at me traveling, look at my home, look at all this. And it's like, they're trying to show you the idea of like, this is what it looks like to be wealthy. I wouldn't be able to have these things unless the things I'm telling you is true. And the reality is, the opposite is true. They didn't get rich or wealthy doing the things that they're going to tell you in these programs and stuff. What they're doing is they're capitalizing on your eager desire to get rich in a very quick amount of time, and they're just selling you this information. And the fact that, you know, there's thousands and thousands of people buying these programs, consultations, programs, what have you, that is what is actually the way that the person behind those programs, courses, and consultations is becoming wealthy. It's from capitalizing on people who want to get rich quick, not because what they're telling you is gonna get you rich quick. Alright guys, so we now know that taking the approach of trying to get rich quick or get rich fast is definitely a path that you don't want to take. But if you know that you do really ultimately want to be rich and you're willing to go down a different path, what should you do? So then that way, ultimately, you could end up rich and wealthy. So what you want to do is you want to start studying and finding people who are rich and who are wealthy currently right now, and have already proven like, hey, if you do what I do, you will get this type of result. And you're not gonna like just do this with one person or two people or even three. You want to find a group of people, you know, who are currently millionaires or more, and then you want to look at their lives and study like, how did these people build their wealth? Like, how did they become rich? What was the process? What were the steps? What were the things that they were involved in that ultimately led to them getting rich and building wealth for themselves. And then you want to, as you're doing this and you look at all these different people's lives and you look at how they got rich and built wealth for themselves, then you want to start asking yourself like, hey, what are some of these things, or what's at least one of these particular areas that I could get myself involved in and use this strategy to ultimately get rich and build wealth for yourself? Because the chances are the people that you're going to find online, or that you find in books, they're going to be very wealthy people, and you do not need to do everything that they did in order for you to get rich and build wealth for yourself. You just need to get into one particular area and do very well at it, and I promise you, you are going to find that you are doing very well financially. So take that approach. Find people that are already having the type of financial success that you want to have, study how they got it, and then start implementing in your life the type of things that they were involved in and the things that they were doing, and you will see that you will build wealth for yourself. And it's not going to happen fast. Do not focus on it happening fast, but instead focus on just doing the process and getting the end result outcome. Okay, so I want to start this video off by asking you guys the question, what do you guys believe it means for a person to be wealthy? What I want you to do is think about that question and then come up with your response and drop your response down in the comment section below of this video. I would really find it interesting to see exactly the way that you guys think about what makes a wealthy person. All right, so when it comes to the topic of wealth, I think a lot of people get lost in the financial aspect of wealth, and that they really just lose sight of all the other things that are involved with being wealthy. So I would just, be upfront and clear and put this video in context with you guys that I personally do not believe wealth is about the numbers. Yes, I do believe that there's a financial aspect to being wealthy, but again, it is just exactly that. It is one aspect of the entire total picture. So with that being said, let's go ahead and get right into today's video, and I'm going to share with you my thoughts on exactly what wealth is. Okay, so some of the usual suspects that we find in someone's life who is financially well off or wealthy is going to be things like they probably have a large income. A decent portion of that income is going to probably come passively to them. They may or may not be employed, totally up to them. That is usually a sign of someone that is wealthy. Then you're also going to see that this person has a fair amount of assets. Now, the type of assets and what asset class that they are invested into is going to vary from, one wealthy individual to another. It could range on a wide range from art. It could be, old classic cars, vintage cars. It could be, all kinds of different types of things. It could be rare jewels. It could be real estate. It could be stock market. It could be, the list goes on and on. It could be very high-end jewelry, so on and so forth. But these are some of the typical traditional signs of someone that is wealthy. And, it could be like high-end watches that are worth a lot of money, that have, been passed down generation after generation, a lot of things like this. And these are all going to be some of the typical signs of someone that has reached financial success in the financial world, and by default we would call this person wealthy, especially if we see that this person has far more in excess of these things than the typical average person. So obviously if we've seen someone with multiple millions of dollars in assets and cash and things like that, we would call this person wealthy, right? So these are, like I said, these are the traditional, common, usual signs that someone is wealthy. But now let's start getting into a little bit more, what are the non-traditional aspects of someone that is wealthy? Okay, so something that I think is really important and a lot of times overlooked when it comes to, all the different aspects that make up a wealthy lifestyle, and that thing is health. Because the reason why I say that health is so important is because no matter if you were the richest man or the richest woman in the world, you have all the assets, you own all kinds of companies, you have endless amounts of money, endless amounts of freedom to do anything you want under the sun, but you have absolutely poor health, what is it all worth? Like, what is the point of having and obtaining all of those things just to not even be around to be able to actually enjoy those things? Like, if you sacrificed your health in the whole process to obtain all the wealth that you've obtained, yes, you got it. You were financially successful. Nobody can deny that, right? Like, you were the richest person in the world. But you will never be around to actually enjoy it. And to me, that just makes no sense. Like, what's the point of getting it if you will never, ever be around to enjoy it, and not even be able to enjoy it for any sustained period of time because you've sacrificed your health in the process of getting this? And to me, this is why I say health is like a very, very like huge aspect or a part of living a wealthy lifestyle. Like you've heard it probably said before, and if not, then here, let me share it with you. People use the phrase and saying health is wealth. And I, the very first time I heard that, like it really like, kind of threw my brain for a loop. But when I thought about it, I was like, well, yeah, it makes tons of sense. Like if you do not have your health, then you do not have wealth, because like we just talked about, no matter how much wealth you have, if you don't have your health, soon you will not have that wealth. All right, so another aspect of wealth that I think is really, really important to live a really wealthy lifestyle is going to be relationships. So what type of relationships? Basically, all of the type of relationships that are going to be important to this specific person. That could be friendships, just people that you meet and you become friends with over time and you just grow close with, or just maybe they're just, casual friends. So you're going to have some that are closer, some that are not as close. Then you're going to have stuff like family, those are a type of a relationship. Then you're going to have that personal or private, maybe intimate relationship, like a spouse, like a husband or a wife. These are all important when it comes to living a wealthy lifestyle, because humans are designed to connect with each other. And I don't believe that there's people who are truly living like a fulfilling, happy life, regardless of if they're, regardless of however much money that they've obtained or however much wealth this person has attained, when they are just sitting back completely all alone. I do not believe for one single second that someone is like, no, I'm completely satisfied just being all by myself. I don't ever want to talk to anybody, and I don't ever want to interact with not a soul on the earth. I just simply don't believe that, no matter if someone says that to be true or not. So like I said, I think having relationships is extremely important. Now, I'm not saying you need to have all of these types of relationships, but I do believe every human needs to have some type of relationships. And I think more times than not, what you're really looking for is quality relationships, people that mean a lot to you. You keep these people close. You probably have a small circle, and then you do the best that you can to just, nurture and continue to just carry on those relationships for as long as possible, because really, especially for someone who's wealthy, they're like, this means so much to me because my wealth cannot buy these relationships. And the likelihood is that it's harder and harder to find quality relationships, because a lot of people, when they find out what you have or how much of the wealth or the lifestyle that you're living, are going to slowly try to sneak around you to try to see what they could get from you, how they could benefit from being around you, so on and so forth. And that's going to make you push people away. So when you have genuine people around you that are a part of your life, I think you're going to draw close to those people, and you're going to want to try to, again, nurture and care for those relationships and hold on to them and value them as much as you possibly can. And this is, again, I believe, a very important, crucial part of living a wealthy lifestyle. All right, so another quality that I think is absolutely important for a person to live a wealthy lifestyle, and that thing is going to be for that person to do things and be a part of things that are going to bring them personal fulfillment. So this is, again, going to vary from person to person, and obviously it doesn't matter if you are wealthy or you are not. In order for you to get true fulfillment, you are going to need to focus on and spend time on the things that bring you, the individual, personal fulfillment. So, I mean, like I said, this is going to vary as wide as there is different types of people in the world. This is going to be that wide of variations. Like your thing could be art, your thing could be photography, your thing could be, going to the beach and just relaxing. It could be like going and trying, different restaurants and eating different food. It could be spending time with family. It could be, crafting. It could be all kinds of things, whatever it is. Like your thing could be like this, like making YouTube videos. It could be, acting, modeling, singing, whatever it is. Whatever the thing is that you do, that you have so much fun and you enjoy doing it so much, working out, whatever it is. But whatever the thing, when you are doing that, it is like so much fun to you. You enjoy doing it a lot, and you would do it, completely for free, not for any other benefit other than just the actual, personal fulfillment and enjoyment that you get out of doing that thing. That is the thing. And those are the things, because the chances are it's more than just one. Out of all those things I mentioned and a ton more, it's like an endless list, but there will be a few things, at least a handful that you will be like, yes, I like to do those things. Those things bring me personal fulfillment. And I think it is absolutely crucial and important for a person who's going to live a truly wealthy lifestyle, for them to implement those different things that bring them personal fulfillment into their lifestyle, regardless of however much actual financial wealth that this person has reached. And then ultimately, this is going to allow them to live a very self-fulfilling life, in the sense that they're doing the things that are bringing them personal fulfillment. All right, so when it comes to me, the way I look at wealth, and ultimately what I think is the most important aspect of living a wealthy lifestyle, it really comes down to the mindset. Because regardless of, the financial success or the amount of wealth that you build as an individual, if you do not have the right mindset, that could lead to you, say, losing the wealth. Or like I said, if you are the type of person who focuses on building the wealth, but you lack the health because you sacrificed your health to get the wealth. Or hey, you have all the money, you have the health, but you don't have anyone to share it with. You don't have friends, you don't have family, you don't do any of the things that bring self-fulfillment or joy or happiness. Then it is like you are just a person who is lonely with a lot of money. And like I said, this is why I say, ultimately, I think the most important aspect of truly building wealth, getting wealthy, and having and living a wealthy lifestyle is really having the right mindset, making the mental shift to not think about wealth as just like a financial number that you need to get to. Yes, there may be a very specific financial number that you're going to need to hit, so then that way you will reach your financial freedom number, and then now you will then be able to ultimately truly live a financially free life. And then at its core, you will then truly be able to live a very wealthy life, because then you will be, this is what I think ultimately is like the epitome of a truly wealthy lifestyle. You will do what you want, with who you want, where you want, how you want, when you want. And if you're able to do all of those things exactly like how I just said, that is like, to me, like that is the goal. That is like at its core hitting like the ultimate high of living a wealthy lifestyle. Like that is what I want out of this life. Because if I could do what I want, when I want, with who I want, where I want, how I want, it's like that kind of covers everything. Like, and on top of that, I'm healthy in that whole process. I mean, I really don't believe that I could ask for more. That is truly like an abundant lifestyle. Hey, what's up, you guys? Welcome back to the channel. Thank you so much for tuning in. I really appreciate it. Hey, so in today's video, I'm going to be sharing with you exactly why you should never try to piggyback or copycat the investments that you see very large investors that are investing into the stock market are making. So we're talking about like your hedge fund managers, your billionaires, and your very multi-millionaires, with multiple millions of dollars. And you are looking at their investments saying, hey, if they're rich and they're making these moves, then maybe I should make these moves as well. Well, we're going to be discussing exactly why you should not do that in this video. So if you're excited and ready to find out exactly why you should not copy their investing styles, be sure to hit that like button. And with that being said, let's dive right into today's video. All right, you guys. So look, one of the very first things and problems that we need to address with this approach of looking to copy or piggyback the investment styles or the investment picks of these very multiple millions of dollars rich investors, or even billionaires, hedge fund managers, things like that within the stock market, is that you need to realize that they are obviously rich and wealthy and you are not. And you're like, I know, I get it, Keith. Like, no duh. That's exactly why I'm wanting to do what they're doing, because I want to have what they have. You want to mimic that success. Well, there's a very, very significant flaw in that type of mindset and that approach of trying to copy them or piggyback their investments. And this is that flaw right here. Well, like I said, they're rich and you're not. So what does this also mean? This also means that this person has gone from at one point not being rich to becoming rich. And the other thing that you don't realize in that is that the way that you're seeing them invest today is not the type of investing style or the approach or the type of investments that that investor was making when they wanted to get rich and become rich and wealthy. So you're sitting back seeing them invest a certain way today after they're already rich and wealthy. But you're not looking at how did they become rich and wealthy. And what this means for you is, rather than you looking at them today and saying, hey, let me do what they're doing now that they're already rich and you're not rich, just like they weren't before, instead of saying, okay, you're looking at the version of them that's already successful, that's already rich and wealthy, and you're trying to copy that, rather than going back and saying, let me copy what they did in the beginning to become rich and wealthy. So you do not need to be trying to copy or mimic their investing styles or their investing approaches or investment picks from, when they're already rich and wealthy. You need to be asking yourself, what was that investor's investing style or approach or tactic to go from being basically starting from zero and growing to being, a millionaire or beyond. That's what you want to do, because you are trying to grow your wealth essentially from zero or very little amount of money into a lot of money, because like you're trying to get the same type of results like them. And then later, when you already have reached a level of wealth, then you can maybe start looking at people who are on your scale or way above, and you're already at that point, rich and wealthy. So you take a different investing approach and have a different investing style now that you are already rich and wealthy. So what this means is that you want to focus on making investments that are going to help you grow your net worth. So then that way you could then in return get to the point of being like a millionaire and beyond. So you want to make those type of investments rather than looking at other people who are already rich, have already reached the goal of being rich and wealthy, and then saying, okay, let me invest like them, because they're going to take a completely different approach and they have a completely different objective than you do. Alright, you guys, so look, another reason why you would not want to just look at these very large successful stock market investors and say, hey, let me just copy what they're doing, let me invest in the same stocks, ETFs, index funds, or whatever cryptocurrencies that they're getting into, is because you do not realize that you don't know why these investors are making these investments. Like, why are they selecting them? You don't know the information that they have access to. So they're very informed and you are not informed. All you know is you're looking at someone who has already obtained rich and wealth and that they've done it through investing, and you're saying, hey, well, they're smarter than me, they know things that I don't, they know what's a good investment I don't, so I'm just going to just blindly follow them with my money, and whatever they put their money into, I'm going to put my money into. Well, you cannot do that, because you don't know what the goals or objectives are from this investor. They might be like, to them, that investment that they make, it might be a very small representation of like their net worth. So and it might be totally speculative. Like they might be like, hey, we're making this investment because, it has a potential to be very huge. So we put a little of our money, and later if it blows up, it's going to become like this, massive return for them. Where if you follow those investors in making that decision, you're going to just like go all in and put your money into like an investment, and it might not pan out, and it's going to hurt you financially very significantly, versus as that investor, it's not going to mean anything to them. They're going to still be wealthy, and they're going to have plenty more other investments that are going to do well for them, and they're going to just keep on going on. So you cannot like just literally just like copy these investors in whatever stock market, picks that you see them making. You cannot just invest blindly behind them. So you see that these investors, they can afford to be wrong and it not hurt them in a meaningful way. But for you, if you're wrong because you're copying them, not just because you made a bad choice, or that you picked a bad stock investment, but you picked a bad stock investment because they picked a bad stock investment because you're just blindly following them. So when they're wrong, it doesn't really hurt them, really none whatsoever. They just carry on. But when it hurts you, it pretty much sets you back significantly from your ability, or on your journey. It sets you back significantly on your journey of building wealth, because now you took a significant loss because you were now just copying these investors in hopes of a big gain, but instead of a big gain, you got a very big loss. This is exactly why you don't want to copy or piggyback their investments. Alright, you guys, so another reason why you don't want to try to piggyback or just copy the investment styles or approaches or stock picks that you see that these very large investors are making into the stock market is because what you also have to realize is these very large, very successful, very wealthy investors in the stock market are investing very large amounts of money, even when that large amount of money just represents a small portion of their net worth. So for them, they might invest $1 million into an investment. That might represent a small portion of their net worth. But to you, $1 million is like, you're like, in 10 years, I won't still have $1 million. In 20 years, I won't have $1 million. So for them, they're investing and buying into investments in very large amounts of money, buying large amounts of positions of these, stock market investments. Whereas for you, you don't have access to that amount of money. You cannot purchase or invest that heavily to make the investment meaningful enough for you. So if you just try to look at the same investments that they're making and you try to buy those same investments or be in as many investments as them, it simply just won't make sense for you, because you cannot invest like them because you don't have the money that they have. So you cannot be in the same type of investments and have as meaningful of a return or as meaningful of an effect, because you do not have the type of cash or money to invest like they do. So that's exactly why you should never try to copy, mimic, or piggyback the investments that you see these very large, very successful, very rich and wealthy stock market investors are making into the stock market. Alright, you guys, so in this video, I'm going to be going over and sharing with you guys exactly why I personally do not buy or invest into dividend paying stocks. And we're also going to be covering, what is a dividend stock for anyone who's like, maybe new to investing or never even heard of a dividend paying stock. So we're going to cover that. And as we're getting into this video, I'd really appreciate it if you guys, would drop your opinion on dividend paying stocks down in the comment section below. I'd love to get your opinion. Like, are you a dividend investor? Do you invest in dividend paying stocks? Or do you agree with me? Like, hey, no, I don't invest in dividend stocks. Like, let me know your overall thoughts and opinions, on dividend, paying stocks and companies down in the comment section below. And while you're go ahead and, drop those comments, if you guys enjoy, personal finance content, content around money, credit cards, things like that, content around growing, your net worth and wealth for yourself, be sure to hit that subscribe button on the bottom right side of your screen, because that way you'll be notified by YouTube each and every time I upload and publish a video. So with that being said, let's go ahead and get right into today's video. All right, so first and foremost, like I said, we're going to cover, what is a dividend or what is a dividend paying stock. So with just keeping it very basic, very simple, and not spending too much time on this subject, dividend stocks or dividend paying companies are companies that tend to be much more mature companies, that are publicly traded companies within the stock market, that rather than being a company that takes their profits, and rolls them back into the company looking to grow and expand the business, they are companies that instead, because they are more mature companies and that they are not growing as fast, in order to attract new investors, to invest within their business, they pay out what is called a dividend. So a dividend is a cash payment, that is paid out to investors for every single share that you own of their company. So if you, for example, buy one share of company, whatever, imaginary company X, and then they pay out $1 in dividend per share, and they typically pay it out every single business quarter, and then there's 4 business quarters. So then typically you're going to receive, like in this example, you would receive 25 cents every single business quarter for every single share that you own of that company X, right? Like that imaginary company. So that's like your basic rundown of like, what is a dividend? It's some money that is paid out to you, the investor, the shareholder, the owner of those shares that you purchased into that dividend paying company. And it's like clockwork. If you are, invested into a really good dividend company, then yes, they're going to pay it every single business quarter. They're going to pay you, in that example, like 25 cents for every single share that you own of their company. And it's going to be every single quarter for as long as you hold those shares. And then typically really good dividend paying companies will raise that dividend, every year or every other year. And then so basically, even if you do nothing, the value of your shares will go up and up, and the income that you will earn will go up and up. And while yes, dividend companies are they're not dead, they will still grow, but they typically tend to grow significantly slower than, say, growth companies, for example. So now let's go ahead and get into why I do not invest into dividend paying stock. All right, so I want to start this off by saying, yes, we're about to talk about exactly why I do not invest into dividend paying stocks, but a quick little side note that I want to make very clear to you guys. The reason why I don't invest in dividend stocks has nothing to do with whether or not I think dividend type stocks or dividend paying companies are terrible investments, because that couldn't be further from the truth. A lot of dividend paying, stocks and companies are really great, amazing, very high quality companies and investments to be a part of. Now, let's get into exactly why I don't make those investments into dividend paying stocks. So the reason why I don't purchase or buy or invest into dividend paying stocks is because I am currently, myself personally, I am not in the investing phase of my life where it makes sense for me to invest my money into an asset like a dividend paying company or stock, because when I look at the different assets or the different types of stocks within the stock market, let's just, do a very basic comparison between dividend paying stocks and growth stocks. So like I mentioned a little bit earlier on in this video, dividend paying stocks and companies tend to be more mature companies. So because they're more mature companies, they're not in the phase of business where they're looking to expand so fast, and they're not in the growth phase basically. So they're naturally growing slower. As a result of them being a slower growing business, they're not gonna, like, their share price is not gonna appreciate as fast. So as an investor, you're gonna get less total returns as you are invested into a company that is like a dividend paying stock. So on the flip side, you have something like a growth stock. These tend to be much younger companies. Sometimes they're less proven companies, so there might not be as much of a history. So the stocks trade much more volatile, like they swing very high, very low. But once the company is on track and it's doing pretty good, and they've kind of got, they got the ball rolling, and it's like, okay, this is a pretty solid, decent growth company. That growth company will significantly outperform, any dividend paying stock, because they're a much younger company. And rather what a growth stock, and a growth company does compared to a dividend paying company or a dividend paying stock, is that growth company, because they're still young and they need to expand, they need to get big, they still need to go like global. And there could be a very tiny company, and in order for them to get big, they don't want to spend, they don't see the best use of their money to be spent on paying money or cash out to investors. So what they do instead is they take those profits and they reinvest it back into their business, so they can just continue to just scale up the business bigger and bigger and bigger. And as they grow and become a much bigger company, and one day become a very global, huge, household name, well, then you as the investor all along the way reap the rewards of being an investor in that growth stock. So it's kind of pretty black and white, plain and simple here. It's so if you're in the phase where, your investing journey, and you're all right, well, I want a little more safety. I want, just a lot of proven history behind the investment that I'm going to get into. And that I just want that financial security of some consistent conservative growth added on, on top of that, security and comfort and growth of knowing that your money is pretty well safely invested into a real high quality business. So you got that comfort. And then on top of that, to know that you're going to get paid a pretty consistent, solid dividend. That's what you're going to get, in a dividend paying stock. Now, on the flip side, if you're in the phase where you're all right, I want my money to grow. I need my money to grow fast. I'm not focused on trying to have income. I'm not, looking for safety, security, and income. At the end of the day, what I'm looking for is my money to grow as fast as possible while not taking on an unnecessary amount of risk, right? Because you're not going to just go out there and invest in any growth stock just because it's a growth stock. You still want that company to show you, hey, I have a really great product or service or something to offer the marketplace. And then once you recognize it, you're in it. And because it's such a great product or service or whatever, it's just going to explode, right? And then as it does, the returns are going to be, awesome. They're going to be great. And it's going to blow away that dividend paying stock. So it ultimately comes down to what phase of your investing journey are you on? Are you in the phase of, your investing journey where you are looking to get safety, security, and income, and just overall preserving your money, and then at the same time, getting paid income for holding those shares? So if you basically are kind of in that retirement type phase, and you're I just want income coming into me, I want to just hold these shares and have income, well then dividend paying stocks to me make a lot of sense, and they could be an awesome investment for that phase of your life and that phase of your investing journey. And then on the flip side, if you're someone who's I'm not in the situation where I need my money to be I don't need, income coming in from my investments right now. I could just, kind of sit back and wait some years. I'm young, I can earn money. I'm taking care of myself as far as earning income. And the money that I'm investing, I want that money to grow as much as possible. So then later on, when I get to the other phase of my life when I kind of am ready to like retire or like scale back, you know, the type of work that you're going to do in your life. And then you can then, because like you have invested a lot of money and those investments in those growth stocks have grown so much in value, you can then in turn take a very good size of that, you know, of all that like wealth that you built up, and then you could then go ahead and say, all right, now I'm in the phase where I want to take like that wealth and move it over into something more conservative like dividend paying stocks. And then you're like, hey, now I'm in the phase of life where I want to start receiving that income. And because you had like built such a significant amount of wealth with all your growth stocks, when you go ahead and put it into something like dividend paying stocks, you're going to receive like a very, very large amount of income being paid out to you, because you grew like your net worth and like your wealth to a significant number because you were just growing and growing and growing like your wealth over all those years, you know, basically through growth stocks, because you were, you know, invested in like high returns, and you were getting, you know, some very high quality returns by being invested into high quality growth stocks. So ultimately, like, to kind of sum up this video and really just give you like a very clear breakdown on why I do not invest into dividend paying stocks, simply comes down to the phase that I am in my life and on my investing journey. I am not in the phase where I want the income to be coming back to me, you know, that I'm investing into stocks. Like, that's not what I'm looking for. I'm not looking to invest my money into some stocks and say, okay, pay me back a, you know, a small percentage back, you know, quarter after quarter, you know, for the foreseeable future. That's not what I'm looking for, because the sacrifice in doing that is that I'm going to get lower total returns. Whereas if I went ahead and said, okay, I'd much rather have my money grow much more faster, and I'm not going to receive any income or anything else other than just my money growing, that is exactly what I'm looking for. I'm in that phase where I don't want the income, I want my money to grow. And because I want my money to grow, growth stocks is where that's going to be. And I understand that by investing in growth stocks, there's a lot of like volatility, there's a lot of like really high highs, really low lows, but ultimately the returns from growth stocks, typically, as long as you're invested into very high quality growth stocks, they will significantly outperform a dividend paying stock. So now you guys know exactly why I do not invest into dividend paying stocks. I would really like to get your guys' personal opinion on dividend stocks, even growth stocks. Like, do you guys invest in dividend stocks? Do you invest in growth stocks? What do you think's better? Be sure to drop your opinion down in the comment section below. And hey, if you're new here and you made it all the way to this part of the video, obviously you like content like this, and if you want to see more content like this, be sure to hit that subscribe button on the bottom right side of the screen. And if you guys would like to watch another video from me, be sure to click this video here that pops up on the screen, and I will catch you guys in that next video.